let's get started. So again, welcome everybody today. You are watching Ultimate Trades. My name is Donkaufman. So Ultimate Trades, which I'm going to describe here momentarily, it's 2021's high probability income generator. Again, my name is Donkaufman and you're watching a TheoTrade presentation. I have to get out of the way of risk disclosure, and I put this up here because I did in fact spend the better part of 15 years inside of the brokerage world. I'll talk about that momentarily. I am no longer in the brokerage world. I exited officially in 2015. So a little bit about why you're here today. So obviously we're gonna talk about what ultimate trades are. By the way, one other informal aspect of today's session that I should let everybody know, right in front of me is a camera right here. Okay, but I also have screens that you can't necessarily see all over the place. I can read your comments over here. I'm looking at my own slides over here, but this is the screen that's actually broadcasting. So if you see me looking away from the camera, okay, it's probably because I'm on a couple of different screens. So why are you here today? Obviously, we're going to talk a bit about ultimate trades and why they're ideal for the current market environment. So you can potentially generate monthly income. We are actually going to look at some very specific trades, and I'm going to give you insight to not when I say specific trades, like I'm just going to show you, oh, this trade, that trade. I'm actually going to show you trades over the last entire quarter. So we just closed out the first quarter of the year, if you want to call that Q1, and I'll actually give you the course of all the trades that I've effectively done. I'll literally go through one after another after another. I'll even show you a couple in December that were interesting in Tesla. So you're going to learn a trading symbol used by professionals on a daily basis to create ultimate trades. I'll actually talk to you a little bit about a very specific symbol here momentarily. Learn how and where you can find edge as a retail trader. So we're going to talk inherently and considerably about what is edge. A few people kind of get the idea of edge, other than you can say it's high probability, and we'll come to that here. We're going to reap the benefits of high probability trades while learning little known secrets to mitigate risk. When you say not taking large losses, what we're really referencing, okay, is the idea of hedging. If you've never heard the term hedge, it's risk mitigation tactic. And we're going to find which products make some of the most viable candidates and which products are clearly a recipe for disaster. If I hear anybody like, can you do this on GameStop? No, and you don't want to. This business, okay, that we're going to explain today is about reoccurring, okay, income stream. That's the key to this. Another aspect that I want to bring right up front. I am going to reference an indicator several times during today's session. And in doing so, okay, I only feel it's appropriate to provide you that indicator. So our gift to you, stay with me right until the end of today's webcast. In doing so, we will give you our auto expected move indicator. It is literally one of the most complex indicators ever coded. It's a $497 value. Why we do that is, if you understand a little bit about the context of the trades that we're going to be placing, I do use this particular indicator. I don't think it's fair to reference an indicator and then say, oh, sign up for it. We're going to give you the indicator, and it's an indicator that has changed the way that we view markets. So expected moves, and there's a little bit about it here. Auto expected moves, they're ranges. They are ranges that are derived from an options marketplace. And when you start to look at them, and I think the most appropriate way to look at them is not, this is a screenshot. This is a screenshot. I like to go to a live trading application. And everybody always asks me the question, which trading application do you use? Well, this trading application that I'm using right now, this is Thinkorswim, but I also unequivocally use Tastyworks. So I'm kind of between brokerage platforms at the current juncture, which I'll explain momentarily. I spent the better part of 15 years helping build Thinkorswim, but it's finally time to go. Anyway, with that, the expected move indicator, I'll bring it up right here. This is auto expected moves. What it actually displays, this is what the options market depicted the movement to be this week. And again, if you've never seen this before, it's uncanny because this is where the week started. This is the upper edge of what we're supposed to do for the entire week. This is a lower edge of what we're supposed to do for the entire week. We're literally sitting on the upper edge of the expected move. You're like, how can I use that? We're going to explain some of that today. And it's very, very apparent. These are probabilities, and it can provide much higher probability. This is IWM. So we'll explain that. Again, this is an indicator. I want to reiterate that. We'll give it to you right at the end. Stay with me right until the end, and we'll actually provide a link specifically to the auto expected move indicator. All right, little housekeeping item. Listen, today, I'm going to go through quite a bit. Some of you, okay, are kind of up to speed, maybe a little bit more than others. That's okay. I'm kind of guessing that some of you, because I was asking a moment ago if anybody actually worked from home, and a huge number of people today are working from home. And I'm guessing that you're trading a little bit more actively. Whether you're active, whether you're not active, there's going to be something in this today for everybody, whether you're an absolute novice, whether you're into the extremes. Okay, I'm actually going to show you both sides of that kind of spectrum. So I am also going to say this, I'm going to start off a little bit basic, but this ain't going to be for the faint of heart. Shut the door, okay? Turn off Skype chat, close Facebook. You're going to need to pay attention today, because I know, again, a lot of people come onto these webinars and, you're like, oh, let's get into something good. We're about to jump into something good almost right off the bat over here. So put your phones on silent mode, kick out the kids, the grandkids. Okay, definitely kick out the kids if you're homeschooling. A year my children have been home. A year. Listen, you took the time to be here today. I'm serious. This is important. It's critically important that you grasp the concepts. Focus on being here. Here's a little bit about me. Again, if you're brand new to TheoTrade and you have no idea what a Donkaufman is, this is Don. Okay, I would be Don. I watched order flow for the better part of 15 years. And that's in very large part why I'm here. I have a very, very unique skill set that there's only a handful of people in the world that ever got access to the information, to the data that we had. And I'll explain that. So my background, a little bit in terms of trading. I grew up around traders. I had an uncle that was a market maker back in the 1970s. I think that's probably putting it mildly. So my uncle actually started a trading firm in 1976, and just a few years later, he had actually owned seats all over the world. He owned over 500 seats. If you're from Illinois, specifically the Chicago area, the name of the firm is called O'Connor and Associates. It was kind of hailed as one of the greatest trading firms ever. And a lot of the firms that are still in existence today are kind of offshoots from some of the partners of O'Connor and Associates. So my uncle actually sold the firm in the 90s to the Swiss bank. It was a multi-billion-dollar deal, which is huge back there. But so I kind of grew up around it. People ask me, like, when did I learn the business? Again, I kind of grew up around it. In the late 90s, I got out of college, and 3 weeks out of college, I was trading. And right after that was the long-term capital management scandal, or crash of the marketplace a little bit. So it's been kind of an interesting career. So I started trading in Chicago in the late 90s, and about just close to 2 years after I started trading, I was invited to a startup brokerage firm, and I didn't know any better. I mean, I literally, at the time, I was 24 years old, and they said, "Hey, kid, we know you from the trading floor, and why don't you come with us?" I was actually employee at the time, number 13, lucky number 13. And I went on to actually build the education division of a brokerage firm called Thinkorswim. I was on the executive team when we took the company public in 2007. And that was about a $600 million deal. We then went on to actually sell the firm for almost a $700 million deal. Okay, so the same firm sold itself for $600 million, then sold itself again for almost $700 million, and that was to TD Ameritrade. I then had a 5-year lockup clause from roughly 2010 to 2015. I was locked up, okay, in a clause with TD Ameritrade, and I actually went on to actually run TD Ameritrade's education. At the time, we had 7 million clients. And that's where, again, this is important. Like, what's watching order flow, the way that we educated clients, the way that we always looked at, client education was from the idea of order flow. Basically, what's watching order flow? It means I had access to everything that you did. What we actually did at TD Ameritrade and Thinkorswim is we actually studied retail clients, hundreds of thousands of them. Okay. In fact, we could tell you everything that people did. Everything from like, if you ever sold a covered call, if you did an iron condor, if you sold options naked, we could tell you the success rates of what worked and what didn't. And that's in very large part of what watching order flow gives you the ability to do. And by the way, when I say watching order flow, you're going to get a good feel that I know everything that you've ever done in your account. I know everything that you've ever done wrong in your account, and you're going to see that a little bit today. So we're going to exploit some of your weaknesses, some of your soft points. Hope that's okay with everybody. Anyway, one of the things that you learn though, working at the brokerage firm and we're watching some of the order flow, is what people do in terms of mistakes. And we watched billions of dollars of mistakes, and some of the knowledge you're going to gain here today is directly derived, okay, from watching literally billions of others' mistakes. By the way, if you ever need to get a hold of me after today, I'm just support at TheoTrade.com. We use a common inbox. So there's a couple of TV appearances. I still do a lot of TV appearances. This happens to be TD Ameritrade TV. This one is CNBC. It's probably just the most, I guess the most important to me because they pitted me against the shark himself. I was the short in Apple and he was the long. With that, let's get down to business. Okay, what are Ultima trades? Come on, I had to get some of the introduction out of the way. Everybody comfortable now? Everybody's good, okay? What are Ultima trades? So higher volatility. And I think everybody would agree since the onset of COVID, we've had higher volatility. It's resulted in significantly more options premium. Now, for those of you that have never traded an option before, I said it already, I said options, okay? If you've never traded options before, when we talk about volatility as it pertains to options, higher volatility makes options higher in price. Lower volatility makes options lower in price. Options implied volatility skew is still at historically high levels, and volatility of the volatility remains at record highs, and that's what Ultima is. Now, I just threw like some wild things at you and tried to soften the blow a little bit because some of you are brand new to this. Here's the first thing, okay? Again, I like to go to a live trading application because I like the dynamic of it. And I'm actually going to bring up the VIX. Most people are familiar with the VIX. Now, I'm not a huge advocate necessarily of the VIX. The VIX, for those of you that don't know this, is what? It's the S&P 500 volatility index, right? It's telling you how risky the options market is, if you will, in the S&P 500, specifically to the SPX. It's just a calculation. What I wanted to show you here is like a 3-year. Let's go to the 3-year, okay? And just a quick glance. Right now, we're actually at the lowest implied volatility that we've been since the onset of COVID. But is it still fair to say, like, look at this, we're at an all-time high right here, right now, it's an all-time high. And we're still, categorically speaking, like my mouse is on, and I just want you to see exactly where my mouse is on, where volatility is right now. But over the last 3 years, we're still like very high in volatility over the last 3 years. Because a lot of people would argue like the volatility has come down a lot. No, it hasn't. It's come down, but it actually hasn't come down anywhere near the norm. The other thing that we actually will bring up is called skew. Some people are unfamiliar with the term skew, and skew is just a dot, okay? But what skew is, skew looks at option premium, okay, which I'm going to talk about here momentarily, and skew is incredibly high. This is where edge can be found. It's one of the places edge can be found in the marketplace. Skew, right? And then the volatility remains still at record highs. Now, when we talk about like Ultima, like people look at this thing and they go, oh, Ultima trades, it sounds cool. Okay, it's not ultimate. Okay, it's Ultima. What Ultima has a real meaning in this business. And if you look at volatility, okay, well, there's the volatility, and that would actually be called VAMA, but there's a volatility, and that right now is what's tweaked, and that's actually what we call Ultima. So when we mention Ultima trades, okay, it is a tertiary derivative, okay, for those of you that are total geeks, tertiary derivative of volatility. And this really should be the volatility. But if I put that up there, people will go, that's it, I'm out of the contest. So what we're basically looking at when we talk about skew and what's going on in the marketplace today, and why am I actually mentioning this to you? Okay, there is edge. There's edge in dem dare marketplace. Now, if you're brand new to trading, you've never maybe heard about this, okay? And by the way, somebody was saying Thinkorswim is not available in the UK. That's good. That's okay, because we're using another brokerage platform now. So if you take a look at this, this is skewness. This is just, distribution curves. Everything you do in your life can fit under one of these. And I love, like, hey, listen, this is like, hey, I remember that thing, the curve, and this is how I got through college. This has got through high school. Okay, listen, everything you do in your life can fit into one of these distribution curves. This being what 68% of occurrences, yada yada yada. But what reality is, okay, isn't this. Reality isn't this. And when I say reality isn't this, listen, drivers, and I love to use this example, right? Drivers. There's really, really good drivers, and then there's really, really bad drivers. But if you ask someone, okay, that lives in like California, for example, let's be really, really specific, Los Angeles. If you live in Los Angeles, everybody's what? Come on, everybody can answer this. All right, so this is the interactive portion of your session today. If you live in California, everybody's a what driver? Okay. See if anybody gets this one. Yeah. Man, the answers, by the way, if you live in LA, don't read some of the answers in here. It's pretty quiet. Everybody that lives in Los Angeles believes everybody else in Los Angeles, okay, is absolutely unequivocally horrible drivers. So your curve would look more like this, right? Because if everybody's a bad driver, it actually pushes the curve over here. There's very, very few good drivers. Well, right now, inside of the marketplace, okay, inside of the marketplace right now, there is heavy, heavy skew, incredibly heavy skew. And that skew, which I will show you in this marketplace, can actually provide some very definitive edges as a trader. And I'm actually going to explain a little bit about that as we go along. So again, how can we use skew to our advantage? Skew provides edge in the sale of out of the money options. Now I said it. I said the O word. So there are some people, okay, that have never traded an option that are joining us today. Listen, if you've never traded an option, if you've never wanted to trade an option, if you've never thought about wanting to trade an option, I'm telling you, tune in, because options are dictating stock price movement today. And I get a lot of people that, from all walks of life, and I'm not here to, you need to trade options, but I will say this, I'm not here to force options down your throat, okay? Many of you probably already do trade options. How many of you guys do trade options? Anybody? How many trade options? Come on, people, these are not rhetorical questions. Jump in here. Everybody jumped in here on the, everybody jumped in here to say something about Los Angeles. But nobody wants to jump in and say, I trade options. And if you've never traded options, you can come in here and go, oh, man, I've never traded one before. I don't know the first thing about them. Okay. The one thing I am just adamant about, even if you don't want to trade options, you still have to understand them today, because it's the driving force. It's like the cart leading the horse. It's what's moving markets today is the option market. So skew is actually going to provide sale in the out of the money options. And I'm going to explain that. And again, if you're experienced, this is where experienced traders go, oh, he's going to show the basics of options. I'm going to start with a very basic example. Within 10 minutes from now, you're going to be like, holy crap, I didn't know that. I don't care how experienced you are in this business. I am telling you, I'm going to show everybody something that you are not expecting to see in light of whatever you might believe about selling options in here. So many traders, when they first get involved in trade, okay, they're usually on the buy side of options. They're still on the buy side of options. When I say the buy side of options, like, I learned to trade me some options. I'm going to buy some calls. Where are you going to buy them? GameStop. What if you're wrong? Don't worry, I got a stop order in there. Okay. The buying of options has actually tweaked pricing to be beneficial for premium sellers. Now, that's something that I cannot stress enough. Okay. The buying of options has actually tweaked, if you will, all right, what we term skew, so much so that it's become incredibly beneficial for premium sellers. And some of you may or may not already be aware of this. Just to show you a little bit like what's gone on in the last year. And again, I know I'm starting a little slow over here, but I want to build a little more momentum for people to understand some background. A year ago, for the most part, everybody's quarantined. They shut everybody down. Retail traders went wild, okay? And it has not abated. And I actually wanted to show you Yesterday's, this is an OCC report. If you've never seen an OCC report, it's just the Options Clearing Corporation. This is published every single evening, okay? This is how many option contracts traded yesterday. Here's the crazy part. So 35 million contracts traded yesterday, but we were the day after a holiday. It's Easter Monday, and a lot of other, okay, a lot of other places around the world actually had markets closed. Look at the year-to-date average. This is 2021, people. Year-to-date average, already up to 42 million. Do you know where we were last year at this time? Okay, 26 million. Holy smoke! Everybody is in on it, man. Everybody is trading. I've never seen anything like this. I spent 15 years in the brokerage world. If you had told me, and again, I exited TD Ameritrade in 2015, and I exited great terms. Again, I had a 5-year lockup clause. I exited, nice parachute on the way out. We started TheoTrade, and in that exit, one of the things we were talking about, I still remember like an exit interview. They actually exit interview. One of the things we were talking about, they're like, yeah, man, one day, can you imagine when people are trading 25 million trades a day? 25 million? They're doing 42 million contracts in a day. It's insane. Like if you told me that 5 years ago, my jaw would have dropped. Okay. Yesterday, in a slow day, we still did 35 million. Okay. And the market's place is like, today it's not even doing that much. Retail traders have gone wild and they're on the buy side of options. And I'm telling you, okay, you need to learn to sell options right now because the skew is phenomenal. So let me actually just explain this. For those of you that are new in like the last year, and there's a ton of you that are new, okay? There's a ton of you that are new learning to sell options. So many of you have kind of heard through the grapevine, and I'm kind of curious about this. How many people here have actually heard that if you want to survive in this business, and I'm serious about this, if you want to survive in this business, people hear this. You hear through the grapevine, selling options is a way to make money. How many people have heard that before? I apologize. I got caffeine though in here. We must keep the caffeine flowing. The interesting thing, people get involved in this business and they're like, buy options, buy options, buy options. But you hear on the side that you can buy options and you can make money. And I am not disagreeing with that at all, because a lot of people made a lot of money this last year in buying options. But everybody still, they come to the conclusion, if you've been in the business for a while, eventually you have to sell them. Okay. If you want survival, if you want, consistency, if you want reoccurring monthly revenue, you're going to have to sell them. Okay. And if you've experimented though with selling options, you know full well there is risk involved. That's one of the keys today. Okay. Today's session, we're going to kind of separate fact from fiction, myths from real risks. Okay. We're going to talk in depth about selling options premium, but more importantly, what if things go completely awry? So that's what we're headed towards today, a little bit about selling premium. Okay. And obviously fact from fiction. So don't panic. Again, maybe you know nothing about options, and I've reiterated this a bunch of times. That is okay for today's session. Newsflash, selling premium can also be done in extremely small accounts, under $5,000, and you can now sell options premium in retirement accounts. I will express that many, many times today. Do not feel, okay, that you're at a disadvantage because you have a smaller account. For starters, today, if this is the first time you've ever learned about options, in all seriousness, look to grasp big concepts regarding probability and risk. So let's get into it. There are many facets of selling premium. When I talk about selling, you're going to hear me use some terms that what I'm basically getting into, and we're going to get moving at a much quicker pace now. In selling premium, when you learn to sell premium, you hear all these different terms. Like you're like, "Oh, sell premium sounds good." Listen, selling premium is the same as selling options. Selling options, selling premium. Okay, credit spreads, short puts and calls, delta neutral. Okay, selling naked and sold it naked. Selling premium can be used both in bullish and bearish. But the point that I'm making with this, I've been around the business my entire life. I'll say sell premium, sell options, sell iron condors, sell this, sell that, short call, short puts. It's all the same thing, people. People make this business way harder than it has to be. Listen, in options trading, hear me out for a second. In options trading, there are calls and there are puts. There's never been anything but a call and a put. You can either buy it or you can sell it. Why do people have to make this business so freaking difficult? It drives me insane. Okay. Again, I grew up around trading, and I knew everything there was to know about trading in just a few minutes. You could buy it, you could sell it. There's a call, there's a put. Done. What about implied volatility? Well, I'm going to cover a little bit of that today, but don't make this any harder than it has to be. Selling premium can be used to create both bullish and bearish positions, but generally sell side activity is considered market neutral. Market neutral, what does that mean? It means I'm not going to sit here. I'm not going to whip out MACDs and Fibonacci's and Bollinger Bands. You know, everything that you're bombarded with on a day-to-day basis in this business, what are they bombarding you with? Okay. Where do you think it's going to go? Where's my MACD? Where's my Fibonacci? Where's my Bollinger Band? Okay. You're not going to hear that today because I'm going to tell you right now that there's no room for that here. This is going to be about probability. It's going to be about price. Okay. There's more mathematics in here than there is, okay, about what do you think it's going to do? Probability and profitability. First of all, you're trading, whether you like this or not. And some people are like, it's based on probability. And they like, really? Everything you do, whether you buy a stock, whether you trade options, everything you do in this business is based on probability. Now, you and I, we can go out and we can create trades all day long with a 90% probability of success, but you can still lose money, okay? I want you to remember something. I'm going to say this a couple of times today. Probability alone does not make you profitable. Remember that. Probability alone does not make you profitable. The reason I say that is, okay, I constantly get emails on literally a day-to-day basis. And I want you to hear this, okay? I get emails every single day, and we have thousands and thousands of people, okay, coming on to the TheoTrade site every single day. And the emails, okay, always ask the same question, and it's amazing to me. They go, all right, can you guys show me a track record? How often you're right? And, you know, not to belittle that, but how often do you want me to be right? How often do you want me to be right? Do you think that being right 90% of the time is going to make you money in this business? I want to know that. I'm not trying to be facetious in any way, shape, or form, because I'm going to show you right now, okay? You need to understand something before we go any further, okay? Being right does not necessarily make money. Somebody give me a stock. Give me any stock. Give me any stock you want. He's got a stock, okay? Seriously, give me a stock that you want me to pull up. I'm reading, okay? Apple. I've never heard of Apple before. All right, okay? Moo Square, okay? LMT. We'll start with Apple. Okay, do you want me to be right 90% of the time in Apple? I know it has earnings, who cares? Let's go in here. Okay, we're gonna go out, let's get crazy. Let's go out 45 days. And I'm actually gonna open a column over here. And by the way, this platform that I'm on, this is Thinkorswim. If you don't know Thinkorswim, that's okay. All right, I use Tastyworks now pretty much as Thinkorswim. And they have similar calculations. But if you're on Thinkorswim, come right over here, okay? And go options, theoreticals, and Greeks, and probability out of the money. One of the things, okay, that I did with Thinkorswim, I spent 15 years working on this trading application. And in that 15 years, okay, I built a lot of the calculations in here. One of the big ones, probability, expected move, okay? There's some of my babies in here. And one of the things that I try to stress to you, you want to be right 90% of the time? There you go, okay? Look, I found me a trade that's going to be right 90% of the time. But you don't want to do it on Apple? Fine. Let's go into Tesla. Okay, Tesla, I'm 45 days out. 45 days out, want to be right 90% of the time? There you go. There's 90% of the time. There's no if, and, or but about it. You could be right 90% of the time. That's what this basically says. There's a 90% chance that this option is going to expire out of the money. Right? Okay. Well, think about that for a second. So I get this email all the time that says, how often are you right? And I go, 90% of the time. They go, man, this is the place for me. But it doesn't mean you're going to make money, because you got to cut through. Again, when I say the fact from the fiction and all the myths out there, look at my success rate. Yeah, what's going to happen to the other 10% of the time? Because markets are trade-off. Markets are always a series of trade-offs. Higher probability, higher risk. You could be right 90% of the time and you can still lose money, okay? So where can you find edge? Because that is what people are here for, right? Good. Get ready, because that's exactly what we're going to do. We're going to jump into some very important examples. All right. First example I'm going to give. This is about the only basic example I am going to give to you. And I'm going to give you this basic example just to get everybody on the same exact page. And then we're going to work up from there. So what we're looking at over here is a stock, and the stock happens to be trading at 50. Okay, we okay? We okay? Everybody good at this point? Because I like to make sure everybody's on the same page. So this is the only fictitious example we're going to give you as well. Everything else from here on out is going to get a little bit more up to speed and into live trading. Here's a $50 stock. By the way, I call every fictitious stock, I call it stock because I have problems. Now, stock. So stock is trading at 50 bucks. We're going to go out. For those of you that have never traded options before, I couldn't make this any easier. We're just going to go out and sell a call. Okay. And in this case, I'm going to sell, all right? And you're going to hate this, a 60 call, okay? And for that 60 call, we are going to collect $1.50. And that call is going to be good for exactly 1 month. 1 month. What did I do? Sell a 60 call, collect $1.50. All right, put my pen down there, stop for a second. Okay, what have I actually done? First and foremost, some of you have never traded an option before in your life, so let's get you up to speed. Well, right here is the stock trading at 50. Do I own the stock? No. Do I want to own the stock? No. What did I do? I just went out and sold a 60 call. You go, excuse me, sir. First of all, I don't even know what a call is. And secondly, how can you sell something that you never ever owned? Okay, options have calls and options have puts. Predominantly, and in this first example, I'm going to mention calls. Why am I going to mention calls? Because it's easier to interpret if you're brand new to options. Most people start with calls because a call gives you the right to do what? Buy. Why are puts confusing? Because puts are the right to sell. You're like, I sold the right to sell? I can get put something? And you know what? Whenever I talk about puts, people get themselves, wait, he sold the right to sell to open the transaction, and they get all confused. So we're going to talk about a call. First of all, let's look at the buy side of a call. What does a call do? A 60 call. A 60 call gives you the right to buy the stock at 60. 60 call gives you the right to buy the stock at 60. 60 call gives you the right to buy the stock at 60. Why would you ever want to trade a 60 call? Because the stock's at 50 right now. If the stock's at 50 and you thought the stock was going to go to 70, a 60 call for $1.50 might be a pretty good deal, right? Everybody with me for a second? Now, again, I'm not telling you that this is no risk, all risk. Okay, don't worry about risk just yet. Just everybody calm down. What I want you to focus though on is the 60 call. Don't worry about risk yet. We'll get there, people. Instead of buying a 60 call, because if you buy a 60 call, you're like, go up, go up, go up, go up. That's, you know, what we call YOLO. That's people like praying, like, you know, to the option gods that the stock is the next game stock. Where's the stock go? 700. Anyway, you sell, in this case, a 60 call. So a question comes up immediately. See, in options, you can either be a buyer or a seller. But the interesting irony is for every buyer, there's always a seller. There's always a seller, okay? If you buy a call, you have the right to buy the stock at 60. But if you sell a call, you are obligated to give somebody stock at 60. So let's imagine right now that you sell a 60 call. Don't worry about the price, doesn't matter. Okay? You sell a 60 call. What's your obligation? Your obligation is to give somebody stock at 60. You go, excuse me, sir, Don, I don't own any stock. And I go, I know. So if you sell a 60 call, you're obligated to give somebody stock at 60. What can happen to you after you sell the call? Okay, don't worry about the $1.50. What happens to you after you sell this call? Okay, if the stock stays at 50, you're going to make a $1.50, right? For a month. So what are you going to do for a month? You go, I hope we don't go anywhere. I hope we don't go anywhere. Because if we stay flat, you keep the $1.50. If we go down, for instance, anywhere down here to like 40, you keep a $1.50. If we go up, let's say to 55, you wet yourself. But you still get to keep how much? $1.50. What happens if we go to 60? You're like, ooh, this is going to hurt. Okay, just a little. But if we go up to 60, then you're going to start to freak out. Because what happens if the stock goes all the way up here to 70? If the stock goes from 50 and jumps to 70, you're like, yeah, it jumps to 70. How much money could you lose? You can lose unlimited in this particular case, unlimited loss. We can show you how to mitigate that risk. But there's unlimited loss if you keep going up. So why do this? Why do this for $1.50? Okay. Well, think about this. If the stock does go up to 70, you're obligated to give somebody stock at 60, and the stock's It's already trading at 70. So you would have to buy the stock at 70 to give somebody the stock at 60. And if you bought stock at 70, gave it to 60, you would lose $10. If you lost $10, but you collected $1.50 up front, what are you? It doesn't matter. You're still taking a huge loss. But the bottom line is this, okay? The bottom line is this, and I want you to see this, okay? What do you think the probability? What do you think the probability of making the $1.50 is? Let's just say the whole $1.50. What's the probability in this trade? Okay. By the way, somebody said margin stops me. How about if I could take all your margin away? I will remove most of the margin. I shouldn't say all your margin. I will remove your margin issues though. What's the probability in this trade? Okay. Anybody have an idea? What do you think the probability in this trade is? Because I know everybody wants me to do examples, and I'll do some live examples here. What do you think the probability in this trade is? I would say that the probability in this trade, okay, is probably upwards of 90%. There's no question about it. I mean, it's $10 to the upside, okay? And it's one of the critical things. Again, one of the things I try to point out to you. Let's go find, is there any $50 stocks even out there anymore? I know that sounds kind of, not being facetious. Is there any $50 stocks? You look at something like Twitter. Okay, Twitter is Mr. Toad's wild ride. Take a look at Twitter. You want a 90% probability? Here it is. This is about a month, a little more than a month out. But I'm just making a quick point. Okay, you think this trade isn't real? Here's a stock that's at 66 bucks. And I'm going to circle some things on the screen right now because I want you to see this isn't just my example of a $50 stock isn't like being facetious in any way, shape, or form. It's real. Here's a stock that's trading for 67 bucks. Right there, there's a 90%. You collect $1 for it. What do? That's the 85s, okay? So in my little example, here's the stock at 67. You'd be selling, okay, the 85 call. You collect $1. Then what do? You go, I sweat for the next 45 days, okay? And that's okay. But listen, that could be an extraordinarily high-risk trade. The point of me taking you through this very first example, okay, learning to sell options premium, okay, is as easy as look at 90%. No. Okay. The one thing I'm going to tell you time and again, I mean, literally anybody, okay, anybody can do 90%. That doesn't make you money. That's one of the key components in here. Anybody can do 90%. It doesn't make you money. Because I'm going to tell you, you're going to be right. 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 You ever been wrong? Have you ever been wrong? Okay. Because that's when you're like, yeah, it didn't work out. It didn't work out. That's what we're going to get to. Again, 90% is all day long. Okay. And I always say this like a monkey, me, could do 90%. And all you have to do is sweat. Okay. Sweat for the next 45 days and you're home free. We have a better way to do this. Selling options equals positive time decay. When you sell options, every day that passes sees the dwindling of an options premium. As time passes, the options you sold start to decay exponentially. Okay. Let's take a moment to review time decay. Now, most people that have traded options, this, by the way, this is the point where I was making. Remember I said about 10 minutes ago, I said in 10 minutes, even if you're extremely experienced, you won't pick something up and it's going to be big right now, okay? Feeling the Theta Burn. How many people have actually seen a decay graph like this before? Because again, this is the whole fact from fiction kind of thing. By the way, I'm running a little bit behind on time. Is that okay with everybody? You guys mind if we spend like, probably run about another 45 minutes, okay? And I'm telling you, this is where things are going to get interesting though. And I don't mind saying, I'm going to run a little long, okay? Okay, I love it. Somebody, the first person came in, I got all day, okay? That's my boy. You're my boy, Blue. Everybody looks at these theta decay graphs. And basically what this says is this, and if you've never heard this before, options decay faster the closer you come to expiration. And it could not be further from the truth. And what that basically means is, I'm going to show you what a decay graph looks like this, okay? You go out one day and you buy this option and the option's trading for $2. And then like, I don't know, maybe like a week or so from there, the option drops to like $1.80, right? And then it's not moving, like the stock market just isn't moving like it isn't right now. And all of a sudden you look at it and you're like, well, my option's only worth $1. You're like, it started off slow. It's picking up steam. And then you get to this point where the option's only worth like 30 cents and you just like throw the mouse against the screen. You go, it ain't even worth selling anymore. Huh? It's like I've seen your screen before. Anyway, and then the option's worth 0. How many people have seen that one before? On your own screen, okay? If you've ever traded options, like, you get that. Theta is supposed to burn faster the closer you come to expiration, and it does, but that pertains to a very, very specific set of criteria and a set of options. Now I'm going to show you a little bit more. Okay, now you're going to discover probability and premium selling tactics. So all I initially did is just brought this up: probability, premium selling tactics with some $50 stock, just to give you an idea what an option was. Okay, now we're going to go a little deeper. Now we're actually going to go a little bit more when I say specific. So this is a $100 stock. Oh, put on your big boy pants, because now we're trading a $100 stock. What's the stock called? It's called stock. I promise this is the last fictitious example we're going to do. We're going to come all the way out here, and we're going to sell. Okay, in this case, let's get crazy. Let's sell a 140 call. That's way out of the money. We're going to sell a 140 call. Okay, and I'm going to sell that thing for, I don't know, $1. I'm going to sell a 140 call. I'm going to sell it for $1. Okay. Don't worry about time right now. So I sell a 140 call, sell it for $1. We are way out of the money on here. What do you want to have happen? Okay, I'll tell you what I want to have happen. Absolutely nothing. If the stock stays flat, I'm probably going to make money. If the stock goes down, I'm definitely going to make money. If it stays flat for a couple of weeks, I'm definitely going to make money in here. Even if the stock goes up, let's get crazy. Let's say the stock goes to 120, I'm still going to make money. Stock gets to 130, I'm still making money. Okay, stock gets all the way to 140 again. This is where you might look for risk mitigation tactics, which I will cover momentarily, okay? But there's still an incredibly high probability. The point being of this example, okay, the point of this example, we're going to go out, okay? We're going to go out and we're going to sell something extraordinarily far out of the money, extraordinarily far out of the money, to almost to the point where there's a very, very minuscule probability of getting hit, okay? So how does this differ from anything that you've ever done before? Okay, well, we're actually going to take advantage right now of what we call Ultima. And what Ultima breaks down to: skew, it's kurtosis. It's actually a tweak in the distribution curve, and I'm actually going to show it to you in real time. So to try to actually explain this on a slide doesn't do it justice. But I'm going to explain it to you as in a real marketplace. And in this case, you know what? Let's see where the market's trading right now. S&Ps are massively unchanged. The S&P futures are unchanged. The NASDAQ is unchanged. Pretty much everything is unchanged. Fine, let's use the spiders. Okay, why am I using the spiders? I don't know, I'm feeling special. Okay, listen, I could use the QQQ, I could use the IWM, I could use anything. I could use Apple, but I want to use the spiders. And the reason I want to use the spiders, it's like the marquee of all products. It's the product of all product. And in this particular case, you know what? I want to make a really definitive point. I'm going to go all the way out 101 days. And you go, Don, between us, Don, that's really far out, because options that far out in time don't do what? Come on. I'm trying to lead all those that are experienced in this. This is an option that is incredibly, incredibly far out in time. So if I'm this far out in time, what don't options do this far out in time? I love it. Somebody said they decay slow. Boom. Okay. Think about it. When you sell options, okay, when you sell options, oh, I just filled a trade. Let's do that again. Create duplicate order, confirm and send. Fire at will, sir. Sorry, trying to work out of some trades at the exact same time here. What are you doing today? Look at this, my P&L is massively unchanged today. Okay, let's go back over to the spiders. I'm sorry, I had to confuse everybody. So there's working orders in my account. We're going to go 101 days out. And I'm going to go 101 days out, okay, I'm going to make an example out of you. I am going to make an example. I'm going to come to a nice round number. And I can tell you exactly why I'm going to come to this nice round number. Here's an option. And I'm going to circle it for a second so everybody can see it. All right. It's trading for right around $1. And I swear to you, I picked it because it's nice round numbers. It's the 450. These are calls, and they're trading for almost $1. Okay, so the 450 calls trading for $1. I'm going to go out and I'm going to sell them. And in this particular context, I'm going to sell them naked. Don't you dare worry about margin. I don't want to hear about margin. Margin is not going to be a concern. If you really wanted to sell options naked, all you got to do is ask, because I'll tell you what, okay, you can work your way around margin now. You can go out and you can sell this option, okay, less than $1,000 of margin. Doesn't matter what's like the account. In a regular margin account, you have to have at least $2,000 in the account. But in an IRA, you have to have a little bit more than that in an IRA. You can even sell, you can sell calls naked, puts naked. Not every brokerage firm allows you to do it. I'm just letting you know that because they have changed the rules, they have changed the regulations in this business. Okay. And very few people know about that. So after 15 years in the brokerage world, I know what we term regulatory arbitrage. I know every in and out, okay, every regulation around margin constraints. Here we go. I'm going to go out and I'm going to sell the 450 calls, and I'm actually going to write it up here because I want you guys to see exactly what I'm doing, because for those of you that are brand new to this, you're going to learn something. For those of you that are experienced, you're definitely going to learn something. We're going to go out, okay, and in this case, and I am going to say this naked right now, we're going to sell, okay, a 450 call, okay, and we're going to sell it 101 days out. Let's say that we collect, and I'll actually work the order right around $1. Okay, I'll work the order right around $1. So we're going to sell the 450 call for $1. Here's the question. Okay, that's the trade. Now, where's the marketplace? The marketplace right now is at 406. Can the marketplace get to 450 in the next 101 days? Of course it can. Sure it can. We're not going to have the trade on for 101 days. Let's get crazy. Let's say we only have the trade on for 30 days. How much can I make on this trade in 30 days? I have an answer for you. Okay. How can you figure that out? All you have to do is close up July. Now, this gets a little bit confusing if you're brand new to trading. Okay. What's a little confusing is you're going to learn real quick what Ultima happens to be. Here's 101 days. Here's 73 days. What's the difference between 101 and 73 days? I'm not, messing with you here. What's the difference between a 101-day option and a 73-day option? If you're looking at the 450 calls, if I sell a 450 call with 101 days, assuming all factors being held equal, okay, what's that option going to be worth when there's only 73 days remaining? I don't know. Let's open it up and find out. Does this make sense to everybody? All I'm basically doing is I'm going from a 101-day option to a 73-day option. Why? Because the 101-day option would be trading for what the 73-day option is worth, right? Now, how many days is that? Okay, it's right around like 20 some odd days. Are we okay? This is where sometimes there's exactly a 28-day difference. It's not even a full month. Sometimes at this point, it's the first time you've seen this, the little hamster gets stuck in the wheel. It's okay. It's okay. Let's open up the 73-day options. Assuming all factors held equal. How much money can we make, okay, for doing nothing? And the option's worth 50 cents. Okay. So I heard that options don't decay very much. Well, wait a second. Exactly 30 days, 28 days from now, I can buy back the 450 call, okay? And I can buy it back for 50 cents. What would I actually make on it? 50%. So I can make 50% in 28 days for doing what? Taking minimal risk. And I can actually mitigate the exposure too, okay? What everybody missed in the business, what's constantly being missed, there is awesome premium to be sold far out in time. See, the thing is, everybody gets convinced that options decay in a certain way, right? They always look at options, oh, they decay exponentially. Okay, wait a second. I'm out here, okay, 101 days out, and I can make 50% in what? In 28 days? What you think I'm going to hold? And people go, what are you going to do after 73 days? I know what I'm going to do. I'm going to go sell another option within 101 days out. You think I'm going to hold the position another 73 days to make another 50%? What are you, crazy? That's where people get killed, okay? You don't ever sell short duration options anymore. The skew is shifted. It's actually literally inverted. And that's what Ultima and skew, okay, and kurtosis has to do with this business. And very few people see it. Very few people see it. And again, I can't stress to you this enough, okay? Have you noticed in my example, I sold options a few months out in duration. Typically traders sell shorter dated options. Therein lies, that's why you're tuning into this webcast, okay? And why criteria is of such critical importance. I'm going to tell you right now, knowing to sell an option 101 days out isn't even a quarter of the picture. All I wanted to get through was some of the myths. Again, separate the fact from the fiction. Imagine though that you can collect, okay, a 50% burn rate in 28 days. People, that was 28 days. You got a 50% burn rate in 28 days with taking minimal risk, because yes, a lot can happen in 28 days, but not nearly as much that can happen in 101 days. The probability of profitability in that trade is like 99.5%. On top of it though, you can learn to mitigate the risk. Now, are we okay at this point? Because again, I'm going to show you one more example before we go any further. By the way, I want to reiterate, okay? I would never display a trade that I didn't want to work, okay? Work it. I'm not going to fill this trade right now because we're 4 cents away, but I'm going to work this order at $1, okay? Working it. So I'm working the order at $1. And again, everybody's like, I still see the people like, what about margin? Don't worry about the margin. Don't worry about the margin, okay? I like what somebody said, rinse and repeat. You should rinse and repeat. You know, I can do this also. Let's go look at a product like IWM. Okay, would this work in something like the Russell? But look, in the Russell, there is no 101-day options, but there's these 85-day options. And if you see, I already have a position on them, but hey, okay, I got positions all over this thing. It's a party. Okay, so let's actually look. What have I done in here? What have I done? So here's the 260 calls. The 260 calls, okay, they're not trading for a lot. They're like 80 cents. They literally are trading 80 cents. What would that be worth like 30 days from now? Okay, well, that's even, well, here. Let's open up the 45-day option. Okay, what was the 260 calls, 260 calls, 260 calls? They were trading for 80 cents. They'd be trading for 20, 25 cents. Looks pretty good to me. So should I do it? Okay, people go, I don't know, ruggy. So look, here's 77 and 81. How do you work the order? Let's work it. Okay, let's actually get this order working. First of all, I'm going to come in here and I'm going to work the order at 80 cents. So watch this marketplace. If I'm working 77.81 and I hit confirm and send, he sends the order. This is going to move the market. Okay, there you go. I move the market. Now I'm the best offer on the screen. Take a look. We'll come to exchange designation. But exchange designation, you can actually see my order working. So now I am the best offer, okay, out there. And I bet you if I cancel or replace this order, and I could do that, I could cancel or replace this order and come to 79 cents. Watch this. Cancel or replace the order, come to 79 cents. He hits confirm and send, he sends it. They have to represent or fill. Now they represented me. When I say represent me, that means they put me up on the screen at 79 cents. Okay, why? Because at this point in time, it doesn't matter if it's the IWM, I am the best offer, okay? And now I am filled. They filled me. And you just saw me fill literally on the offer. People, that's how you learn to trade. Okay, you got to get filled. You got to get filled at good prices. So I'm filled. Now what do I do? Oh, nothing. I already have hedges on in this case. I'm going to show you what hedges mean momentarily. Okay, but this is about criteria. This is about execution. This is about knowing how to mitigate exposure. Now let's look to the dark side of the trade before we get any crazier in here. Okay, before we get any crazier in here. By the way, I love what somebody's saying. They're like, I can't do this. I can't do this. Don't worry. Okay. That's one of the, if we should say, the margin side of this is one of the tricks of the trade. And the brokerage platform says, I can't do this, okay? We can get you to be able to do this. Let's look at the dark side of the trade. The 90% probability and then the 10% hammer. So 90% sounds great, okay? And I know a lot of you that are tuning in today have probably done this. 90% sounds great, but then 10% of the time, the market just rips your face off. And if you've never heard the term rip your face off, okay, you're new to this business. How many people have actually heard that terminology before? Okay, rips your face off is the quintessential trader terminology. We should have an entire course here on trader terminology. So 90% of the time sounds great, but 10% of the time, the marketplace rips the face off. Listen, when you trade high probability strategies and you're wrong, you get hammered. Now, I want to explain the plight of the retail trader. Again, earlier here, I asked the question, and I think a couple of you are a little bit more in tune right now, but earlier today, I actually asked the question. I said, how many of you, honestly, how many of you have sold premium in some way, shape, or form? You may have done iron condors. You may have sold naked. You may have sold covered calls. You may have done anything. How many of you have sold premium in some way, shape, or form? Okay, because I want to get down to the finite aspects, okay, of where everybody goes wrong with trading. And because a lot of people are listening to this right now and they're like, how is this any different than the crap that I did, a couple of years ago? I'm going to tell you exactly what you did, and I'm going to differentiate it from what we're doing with Ultima trades. Okay. First of all, I'm selling premium further out in time. Secondly, I want to tell you exactly what you did. You learned to sell premium, and you learned to sell premium maybe a couple of years ago, maybe a decade ago, maybe it was 15, 20 years ago. And you went out and you sold premium. You probably did something called like an iron condor, the iron condor. And you're like, it was this amazing strategy. I sold options and then I bought other options to hedge off the options that I sold. And you went out and you did a 90% probability trade. And you go, oh, look at that. And after 30 or 40 days, it worked. And you go, this is genius. Everybody thinks that the first time. This is genius. You had no idea what you were doing. You're like, I finally made money. Of course you made money. It was a 90% probability trade. Then you went out and did it again. You did it again. How much did you make? You made $1. So you went out there the first time, you made $1, and you're like, I'm unscathed. And then you went out there another time, and you're like, I'm unscathed. I'm making money. On the third time that you've now done the iron condor, you're no longer doing one contract. Hey, you're going to scale up a little bit. You scale up a little bit. So you scale up a little bit. Instead of doing the 1 lot, now you're capped in 3 lot. And you're like, I'm a 3 lot trader. Okay. Yes. And you're doing it in the spiders. By the fourth trade, you're no longer trading spiders. By the fourth trade, you're actually believing that this crap works. So by the fourth trade, instead of trading the spiders, now you're doing a 10 lot in the SPX. And you go, well, what's the SPX? The SPX is exactly 10 times the size of the spiders. So you went from captain 1 lot to what? 10 contracts in the SPX. By the way, the marketplace is watching. The marketplace knows. The marketplace is diabolical. The marketplace is just evil enough. It's like, come on. Okay. It's like fishing for new people with iron condors. I've seen people do this so many different times. It's ridiculous. They go, come on. And the first time you do a 10 lot in the SPX, the market goes, gotcha. And all of a sudden smacks you and you end up losing more money than you ever dreamed. And that's where people get like, 25, 50% of their account wiped out. And I go through this. And by the way, I can tell you this in 50 different ways in selling premium. Okay. And how people get lured in with selling premium and they just go bigger and bigger and bigger. And they're like, oh, and then it was too big. And then all of a sudden something happened. Okay. Of course, something happened because the market doesn't give free money away. And people look at this and they're like, holy crap, man. It's like this guy could see my account. I could see your account for 15 years. I've seen everything that has ever gone wrong with a retail trader. Everything from like when people go, oh man, I did a really stupid thing. I'm like, I know, I saw. It's horrible. Okay. Look, you got to understand, like I'm sitting there behind my screen at home and I'm like, it's like watching this really, really bad movie and you know exactly how it's going to end because I've seen it happen before. When I worked at Thinkorswim, you'd be watching from behind a screen. You're like, lady, don't go in there. He's got an axe. He's going to kill you. That's the same thing as watching you trade into the SPX for the first time. Lady, don't go in there. Okay. It's a train wreck. Your losses are going to exceed the gains. And again, people like always like, holy crap, man. It's like you can see the account. So what happens is people go, I make money, make money, smack. But that doesn't stop you, does it? So you figure out after that life cycle, and I'm going to tell you exactly what you did. Okay. After that life cycle, you get the head ripped right off the shoulders. Okay. Then you learn something else. Then you go back to another class and you go back to the class, you go, I can fix it. I know I can fix it. Fix. So this is where people, they get cute and they go, if the trade goes against you, you can fix it. Okay. You can turn a real nasty trade into what? Okay. A really bigger crappy trade. Listen, fix is a very, very dirty little word in this business. Okay. 15 years in the brokerage business, I am completely cynical regarding good trades gone bad. I've seen it all. I mean, literally, people teach classes on like, let's morph the trade into this, amalgamation of crap. Anytime that you're fixing anything in this business, anytime, do you understand what the word fix means? It means more transaction costs and more risk. There is unequivocally no way to do this without more transaction costs and more risk. So the very notion of fixing a trade takes good money and just fires it like a hose into a bad position. Okay, it's good capital after bad. It's absolutely horrific. There's no way to fix a trade. By the way, I'm not saying that fixing a trade can't work. It can work. But it's still throwing what? Good capital after a bad trade. You got to throw it out like yesterday's trash. Okay. Best analogy I can give you. Best analogy I can give you for fixing a trade. You take a car, literally, you take a car and you just drive it off of a cliff, preferably not with you in it. And then you bring that car to a body shop. The body shop is going to tell you the same thing about the car that I'm going to say about your losing trade. It's a piece of garbage. Let it go. You know, literally, you drive a car off of a cliff, you bring it to a body shop, and they're going to be like, yeah, so you paid 50 for the car, 50,000 for the car. It'll cost at least 60,000 to fix it to make it look like it was. We're going to total out the car. Okay. At least the body shop is smart enough to know to total out the car. It's a piece of junk. Let it go. Nope. People will fight those losing trades to the bitter end. Listen, you need to do this right. Okay. Learn, okay, to correct good trades gone bad. And that's where selling premium, okay, becomes much more holistic. So I'm going to throw some pretty wild concepts at you here for just a moment. When I say some pretty wild concepts, get ready for it, okay? Because what we're going to do is we're not going to go out there and just sell naked options premium. And people have heard horror stories. He sold options naked. I sold naked, and it sounds kind of wrong. Okay, it is kind of wrong. You are going to have to hedge. Now, you're going to hear several different terms, right, here about hedging. Okay, when I say hedge, what am I referencing regarding the hedge? So we are going to use what is termed, okay, a hedge. There are several different hedges we use. One is called an RTS. That stands for risk, right? Twist, okay? Another hedge is what we call a VVS. That is better known as a VIX vol spread, okay? Last but not least, we have what we term a gamma iron. What these hedges do is they are designed, okay, from the get-go to mitigate exposure of trades gone wrong. Each of these strategies, you have a selection of them because they don't, like sometimes it's good for an RTS spread, and sometimes it's good for a VIX spread, and sometimes it's good for a gamma iron. You have to have risk mitigation in place before going out to execute trades. Why? Well, you know, a VIX volatility spread, like what does that sound like to you? I'll tell you exactly what the VIX volatility spread does. If the marketplace is to crash, the VIX spread will swoop to life and it'll save your life, okay? It is a very, very dirt cheap, inexpensive hedge. How about for the next 60 days, okay? You can go out and pay less than $1 for a trade that would mitigate exposure to the downside to the tune of anywhere from $20 to $30, meaning that for $1, okay, it can give you $20 of downside coverage. You got to ask yourself, how come everybody isn't doing that? Okay, because they don't get it. And I'm going to tell you right now, this stuff has changed. It's changed a lot in the last year. You get somebody that's looking at trades, you know, from 10, 15 years ago, somebody that's like, I'm a former market maker. You got to look at the mathematics of it. The VIX volatility spread, man, those things price well. Okay, you can go out there and you can actually load up on these VIX spreads. Even if the marketplace crashes, you're not going to get killed. Let me show you exactly how it works, kind of in context. Keep this in mind. So we're going to look at the spiders. Where are the spiders trading at right now? Okay, let's assume that we're going to trade some spiders. So keep those in mind. We're going to look at the spiders. And the spiders right now are trading, call it 405, 405, 406. So we use the spiders in this particular context. So the SPY, okay, is at, we'll call it 405. SPY's at 405. I don't own stock. I had nothing to do with the stock. I'm not going to own the stock. I'm initially going to come out here and I'm going to sell, okay? What did we sell a moment ago here? We tried to put an order in for the 450 calls, the 450 calls. Don't worry about what I'm even going to collect on them. It could be $1, okay? Let's say I collect $1 on them. So I sell those 450 calls for $1. I would simultaneously sell puts. How far out of the money would the puts be? You're like, whoa, man, I forgot about those, okay? The puts, we might be able to sell something like the 300 puts. And those 300 puts, I'm just going to do it off the top of my head. Those 300 puts are going to be trading for at least $1.80. Okay, they're going to be trading for at least $1.80. Now, why would I sell a call and sell a put? Because now you're like, you have double the risk. No, you don't. Because the last time I looked, the marketplace could go up, but the marketplace could go down. And from a margin standpoint, if they're going to hold, watch this, if they're going to hold $1,000 a margin, that's all that's going to be held on this trade. If they hold $1,000 a margin on the call, if you additionally sell the put, they will hold no more margin. If your brokerage firm doesn't do that, they're doing it wrong, because the marketplace could go up and the marketplace could go down, but it can't go both ways simultaneously. Okay. Now, we just did one trade. That's it. All I do is do one trade? Absolutely not. I'm going to go out there and I'm actually going to scatter a couple of trades out here. I'm going to scatter a couple of trades over here. Okay. I'm going to sell the 300 puts. Okay. I'm going to sell the 280 puts even further out of the money. Okay. I may actually turn around and sell, and these are puts. Okay. I may sell, for instance, 320 puts. Again, I'm just scattering some stuff around just to make a quick point. Oh, I'm definitely going to go out here and I'm going to sell. Okay. I already have on the 445s. Okay. I have the 445s. I could go out here and probably sell, for instance, the 460s. Okay. What I'm actually doing is building, okay, a little bit more of a position. I don't want to put all my risk at one point, because if I put all my risk in one place at one time, guess where the marketplace could go? It could go to that point and it would take out all of my troops simultaneously. Now, everybody looks at this and they go, this is crazy, man. He's selling options up here and he's selling options down here. What if we rally huge? What if we crash? Think about that. What if we rally huge? What if we crash? What do you think these are up here? RTS, VVS, gamma iron. Okay. First of all, let's talk about the dark side of the force. The scariest thing that can happen to you. The scariest thing. People go, I can manage my risk. I can manage my risk. No, you can't. You're going to wake up one day and the marketplace is going to be tanked. That's just all there is to it. You're going to wake up one day, okay, and the market's going to be down so far, you're never going to be able to get out of the positions. If you do not have a VIX volatility spread on to cover your risk down here, you're already dead. Nobody told you that, but it's true. Okay. That's why these options are trading for $1.80 for $2. Go look at them and I'll show you in just a moment. In fact, I'll show you right now, because I can't stress this enough. Like, people, they get this all wrong. They have this constant belief in their head, I can get out if it goes wrong. Here we are. Okay. We're way out of the money. Here's those 320s. There's the 320s trading for about $1.80. Okay. I had the 300s trading for $1.80, but here, those 320s, they're trading for $1.80. Okay. You'd never be able to get out of them fast enough. You'd never be able to get out of them fast enough. But you look at this and you bring it into context. You don't have to get out of them. Okay. Because for every one, and I stress this, for every one of those little monkeys right there, okay, that VIX spread is going to pad our risk. Why? Because we have a VIX vol spread on place. So this market starts to crash, the VIX vol spread comes to life and gives you more than enough time to mitigate exposure. You go, okay, that's pretty good. I get it. Okay. Now, what do you do for the upside? People, the upside is easy to mitigate risk. If the marketplace explodes to the upside, you know what the cool thing is? When markets rally, what happens to volatility when markets rally? Volatility goes down when markets go up. Predominantly, volatility goes down when markets go up. We have a trade called a gamma iron. And what a gamma iron does, okay, it's what we term an inside hedge. As the market goes up, we're going to make money on the gamma iron, okay, and it's going to offset most of the risk of these out of the money calls. It is a very finite system. With its structure, you can go out and you can actually build an options inventory. And people always ask, how much money can you trade this way? As much as you want. You can do millions of dollars this way, but you can start this stuff with as little as $2,000 in the account. Margin is no longer an issue. I'm telling you right now, you have got to learn how to do this. Okay. We build portfolios literally that you can follow every step of the way. When I say portfolios, like, listen, it's not all that inspiring today, you know, because markets are not moving, but this portfolio, the portfolio I have on for selling premium, I'm going to show you the entire quarter's results for this portfolio momentarily. Today, it's up $446, but the market isn't doing anything today. Okay. Listen, you need this in your life. This is why you want to sell premium. This is why you want to learn about Ultimate Trades. Premium can now be sold in small accounts, even under $5,000. You can do this in an IRA. Yes, you can actually sell premium naked in the IRA. And again, everybody always goes, my brokerage firm. Your brokerage firm needs to get with the picture real quick, okay? Because there are brokerage firms that you can do this in an IRA, okay? Completely tax deferred. Produces positive theta decay. So all things being equal, today is kind of a nonchalant day. Yesterday the marketplace moved up, but with this portfolio, okay, I'll take what the defense gives me. All right, I'm up, $500 in a portfolio with absolutely nothing going on in the marketplace. That ain't bad. You can actually use premium selling techniques to enhance existing positions. Provides an incredibly high probability of success, and you never need to buy or sell the stock. okay? And I just, again, I want to be incredibly consistent with this. You can be wrong on market direction and still have profitable trades. Now, is there any directional feel to this whatsoever? Sure, if you want there to be directional feel, go to town. You want to be a little bit more bullish, you want to be a little bit more bearish, fine, okay? I'm just not into it right now because I got to tell you, right? I've been trading for a long enough time to know like, yeah, I've got some bearish positions on here and there, but when it comes to selling premium, okay, selling premium is the most non-directional thing I'm going to do. Selling premium finances what else I want to do in the marketplace. Okay, so that's why I said you can enhance existing positions, and it's why you need this in your life. It doesn't, you know, people, it doesn't matter, man. The market's at an all-time high. Yeah, it is right now. It's at an all-time high until it's not. Okay, selling premium could potentially bring in consistent returns while minimizing your risk. Right? If you want to learn how to sell premium, minimize risks the right way, we're going to talk a little bit about criteria. Now, when I get into criteria, and I'm going to cover that here in a few minutes, what is criteria? Criteria are the nuts and bolts behind this. Criteria, the specifics. Criteria is the recipe. Criteria says, step one, these are the products you want to trade. Step two, this is a liquidity you need. Step three, what expiration cycle? Step four, what should be the probability? Step five, how do you actually, I mean, it just goes on and on and on. Okay, that's criteria. Before I get there though, I'm going to show you a couple of live trading examples. I'm going to show you a couple live trading examples. Listen, variations of all the trades that I am showing you right now can be done with as little as $2,000 in a funded brokerage account. And you've heard me say this like 10 times today already because I just hammer, hammer, hammer. You can even do it inside of retirement accounts. I'm going to show you a handful of trades from December. And we're just going to jump into January, February, March, up until literally today. So I'm going to start a little slow, and then I'm going to rip through a lot of trades. I'm just going to show you every trade I've actually done in what we call the TheoTrade. It's the Ultima Trades portfolio. First of all, I started out the portfolio, okay, and I wanted to make just a couple key points over here. This is actually a trade in Tesla, okay? The reason I wanted to make the point of Tesla, everybody always asks me, what about direction? If you did this in Tesla, Don, you would be getting killed. Think about that for a second. If you were doing this in Tesla back in December, you would be getting killed. Okay, this is Tesla. I sold a call. Selling a call technically is a bearish position. Am I getting killed? Take a look at the trade. Now, I want to give you the specifics of this trade. First of all, what you're looking at over here is Tesla short call, right? This is the exact time of execution right there. Is what? This is to open, this is to close. To open, to close, open, close, open, close. So this is the opening trade, this is the closing trade. This is exactly what I sold. This is what I bought back. This is the selling price, this is the buyback price. So if I sold it for $3.90, I bought it back for 65 cents. It's an 83% return, okay? Now, when you sell options premium, if you sell something for $5, the most you can make is ever $5, right? If you sell something for $3.90, you can't make more than $3.90. So, okay, you're never going to make more than what? Than 100% on any one of the trades, but that's okay. Okay, but I wanted you to see this, and I'll show you why I'm showing you this. Okay, first of all, you go, where did these screenshots come from? This, okay, right there, if you're looking at it, that came directly from Thinkorswim. In fact, I want to make sure everybody's comfortable with this idea. I'm going to go to my account statement, and I'm actually going to type in Tesla. Okay, apologize. Tesla, and I'm going to go back more than 40 days. Let's go back in here, okay? I don't know, what was that, about 120, 130 days ago? Let's go, let's get crazy. Okay, let's throw 130 days in. So if you want to know exactly where this came from, it came from right here. This is the account statement. These are the executions. There it is. Okay, there's the 390. There's Don buying it back for 65 cents. I just wanted you to see exactly where this came from. It came from my account statement. Okay, so 83% return. By the way, this is selling a call. The stock was incredibly what? Incredibly bullish. Let's do it again in Tesla. This one was actually put on December 14th, taken off December 21st, 90% return, sold it for $4.25, bought it back for 42 cents. Again, where's that come from? It comes from here. See, I didn't do it just once. I went back and did the exact same thing, and I did it on the exact same option. So I sold a 950 call, I bought a 950 call back. Okay, and I sold a 950 call, and I turned around and what? Bought a 950 call back. By the way, I didn't even include this. I also did a couple of puts in here. I didn't show that. The reason I didn't show the puts, those were easy. It was the calls that were, it was scary. Okay, so it was scary because look at Tesla at the exact same time. If you go over here and actually look at the chart of Tesla, back in the December, November timeframe, stock was actually straight up. Okay, to me, this was like the holy grail of trades. Here's another Tesla trade, January 8th, January 11th, 58% return. Okay, what did I do? Sold it here. Now, that was the 1260 calls. That was ridiculous. It was the 1260 calls. I love it. Okay, here's actually a bond trade. Huh? Wait, you can trade bonds? Yeah, why not? Okay, why not do this in bonds? Bonds are Mr. Toad's wild ride right now. Seriously, bonds, okay? Bonds have a higher volatility right now in most cases than do the S&Ps. You do it in bonds. Here's actually a trade. Now we're actually in January. Here's a trade, 57% return. Now, if you've never traded bonds before, do not lose it on me. I sold it for 14 ticks, bought it back for 6 ticks. It's a 57% return. Bonds still trade in fractions. You have to love that. Let's continue on. Okay, so there's a bond trade. Here's another bond trade. Okay, this one's a 53% return. So if I did it once, I'm going to do it again. Listen, I'll do the exact same thing again and again and again and again. You think this business is about excitement? It's not. It's about repetition. Okay, I am a very repetitious individual. So by the way, these are two different trades. There's Tesla. This is a bond trade, and this is the 161 puts. Then I went out and switched to the 162 puts, but they're actually done pretty much overlapping the same time. Then I come to the IWM short call. Here's where we start getting, into some ETFs. Here we are, IWM short call. What did I do? I sold a 231 call. I bought it back. Okay, I sold it for $1.46. I bought it back for 56 cents, 62% return. Time out for a second. Okay, the timeout is simply for this reason. Yes, this is a 62% return. How many contracts can you do? If you just did one, okay, you just collected $146, bought something back for 56, bucks. What are you actually netting on this trade? In this case, okay, it's a whopping $90. But that's if you did one contract. Could you do 10 contracts? Yeah, of course. And then this is $900. So do not confuse, contract size in this, because commissions are now flat across the board. Whether you trade one contract or 10 contracts, okay, commissions are not going to impede upon you. Commissions are dirt cheap right now. So there's no difference. And that's why the contract size is negligible. I don't care if you trade one, if you trade five, okay, contract size and scale can come later. First, you have to understand the methodology. So I go out, okay, and I actually sell this call, and I recover it, and I made 62%. Okay, let's keep moving right on. So here's the bond, here's the IWM, here's another IWM trade, 53% return. Here's another Tesla short call. By the way, here it is, people. Time out. That's the holy grail. I sold the 1575 calls and I sold them for 266 and bought them back for 64 cents. 76% return. Why do I call this the holy grail? Okay, look at the day of the trade. It's on January 26th. Wait for it. Wait for it. Now, January 26th. Okay, wait for it. Yes, I caught the all-time high of Tesla. By the way, I didn't even use a chart to figure that trade out. I just used what was actually called the skew. The skew said, sell, baby, sell. So I did, and I'm dead serious with that one, okay? That day, I actually traded the all-time high of Tesla by selling a call for a whopping $2.66, but it's the 1575s. Okay, I love showing that because did you use a MACD, a Fibonacci, a Bollinger Band? No, I use the skew. Okay, here, this is actually selling a put in the spiders. All I'm basically doing is exactly what I said a moment ago. So if I'm going through all these trades, I just have this distribution curve, and I just sold a bunch of crap out here and sold a bunch of crap out here, and then I hedged it. And you're like, oh, why do you call it crap? What do you call it? It's just gonna burn, okay? Burn, baby, burn. So I sell this put, and I sell this put, and it's a March 19th, 279 put. Sold it for $1.46, bought it back 58 cents, 60% return. Okay. And then, okay, let's keep going. So that's the Tesla. Then we go to the March, SPY put. Here's another put. Here's the 275 puts. There's the 275 puts, 275 puts, 50% return. We go to another SPY put. By the way, these are all different trades. They're all around the same time frame because when I see something, I just, the skew is good. Let's go for it. Here's a 51% return. Then I actually threw a SPY short call in there. So the short call, this one's covered 57% return. SPY short call covered 49% return. Okay, here's another SPY short call, a 50% return. Sold this one for $1.82, bought it back for 91 cents. It's a party, people. There's like the 430 calls. Okay, this is the QQQ. What's the QQQ? It's the NASDAQ 100. Here's a 62% return. Okay, I know what everybody's looking for. They're like, where are the losing trades? Okay, this is a high probability stuff, and it's so far out in time. Look at the day of the trade. Look at the day of the trade. This is January. This is closed in February. What did I tell you earlier? I was going to sell something that had like what? Good amount of time. This is the March expiration. The March expiration just happened like a week ago. This is the quarterly expiration. 365 to 365. Sold it for 99 cents, covered it for 38 cents. Told you, I don't want anything like, with risk. Okay. What am I in this business for? I don't want to take a lot of risk. Here's one again, open same day, 53% return. Another one. Okay. Open what? January 20th, closed February 26th, 50% return. Okay. Here's yet another one and another one. And I just keep going sequentially. I will show you literally every single trade, okay, that I have done over the quarter. The only thing I'm not showing you in here, the only thing I'm not showing you is the hedges, which I'm going to show you momentarily. Okay. In this particular case, 64% return. It's a short call. Here's another one. Okay. Another short call inside of the QQQ, another short call inside of the QQQ, 57% return. Here's the IWM short call for a 56% return. Okay, here's one for what? IWM short call, 50% return. IWM short call, 54% return. IWM short call, okay, 54% return. By the way, we're coming more current right now because you can see we're already into March. All right, QQQ short put. So I sold some puts, had to cover those, 52% return. IWM short put, 49% return, but still my heart. Somehow I screwed that one up and only got a 49% return. Here's a 47% return. I got a little punchy that day. I got a little excited. Okay. But I actually had this one on only for what? I opened it on, looks like March 4th, closed it on March 10th. And again, if you want to see this, okay, in context of this trade tab here, here is the IWM. Okay. Here's the IWM. Now it gets a little crazy as you start looking back, but in the IWM, you can literally see everything I did. Like here's the 250 calls. Okay. This is where I just bought back. I just showed you like literally this trade. Okay. You can look back through time. Look, here's the 163 puts. Go take a look again at the slide deck that I just pulled up. Okay. There's the 163 puts. See, $1.79, 95 cents. Okay. Go quickly glance back over the platform. There it is, 95 cents, bought them back. 51 puts. I just keep going all day. Here's the QQQ short put, 49% return. QQQ short put, 51% return. Bonds. Again, I'm back to bonds. By the way, in this particular portfolio, just to make a quick point, I really only threw QQQ, IWM, spiders, bonds in here. The Tesla was just for a little flair because I wanted to show you a thing that was going straight up and you could still make money on it. But this, okay, for inventory purposes, I just wanted to show you a handful of products. Because I'm going to tell you right now, people go, want stocks, and you have to have the stock screener, and you don't have to have any of that. You just have to know what to actually trade, when to trade it. Here's bonds, short call, 50% return. Now we're starting to get a little bit more recent. IWM short call, 54% return. IWM short call, 51% return. IWM short call, 50% return. We're getting more recent now. We're up to the 23rd, 50% return. IWM short call, 53% return. Bond short put, 50% return. Okay, IWM short call, 51% return. IWM short put, 50% return. Okay, IWM short put, 52% return. This is exhausting because now we're all the way up to April. So we just closed out the first quarter. IWM short put, 52% return. Okay, wait for it. That's today. I just literally covered this today. This is a short put that I sold in the bond, sold it for 17 ticks and actually bought it back for 8 ticks to 53% return. And again, I will show you every single trade we do. If you're curious about any of the trades that we do at any given point, I'm literally keeping a portfolio. Okay. Here at TheoTrade, everybody can see this. You can see every single trade that we're doing inside of the portfolio, win, lose, or draw. Okay. And I'm going to tell you right now, like what's the part that I didn't show you? I didn't show you the hedges. Okay. I have what we call sacrificial lambs. Okay. I go out there and I sold this for $2 and bought it back for $1. Sold it for $2, bought it back for $1. Sold it for $3, bought it back for $1. A couple of those dollars I do use for hedges. Did I have to use any of my hedges? Nope. I didn't use any of the hedges for the entire first quarter of trade. What does that amount to? It amounts to, I never took any risk really in the first quarter. I didn't really take that much risk. Yes, I had positions on. I closed the positions effectively. Okay. But I didn't actually feel that I took any risk. And if you take a look right now, see that VIX trade? This is a VIX volatility spread. And the VIX volatility spread, you're like, it's down 50%. That's right. That's a sacrificial lamb. When you have a hedge on, you want to lose money on the hedge because the hedge is there to reduce risk of the aggregation of the portfolio. That's what this business is about. It's about going out there and achieving incremental returns. And I'll tell you right now, we'll show you a portfolio, okay, for everything. I mean, literally for everything. You can go scroll back in time, but this is a portfolio that we have actually allowed, okay, our clients here at TheoTrade to track. Listen, what better time? This is a skill set that'll last you literally a lifetime. The other aspect of this, I was asking this to people when we first kind of tuned in today, is how many people are actually working from home? Most people still are working from home. And I have a feeling that most people are going to continue to work from home regardless of what occurs in the future. Some people are actually still quarantined right now. We have actually a lot of European clients that are still quarantined. You're right. This is a way to emerge a lot stronger, a lot better financial shape. But the other aspect of this, okay, this is very part-time. This is not going to be hands-on, which I'll mention again here momentarily. By the way, what our members are saying, I just threw a smattering of what a couple of our members are saying. And this is back literally over like the last year. Daniel said, hey guys, new member here. Been lurking in chat for about a month. Was short the SPY. TheoTrade's the only membership that I've ever had that pays for itself and then some. I like this one. You won't find a more supportive and more profitable room anywhere in the retail business. Okay. Listen, if you do not have a huge amount of time, Ultima trades, and each and every trade that I have displayed to you today was displayed live at TheoTrade. Okay. The trade results, though, this is not hands-on trading. This is not day trading. This is not sitting in front of your screen like, I'm cool if you want to do that. And we actually, and I'll explain this in a moment, we have traders that call out trades all day long. This, though, is very set and forget. Selling premium and ultimate trades, it's very hands-off. Like I don't want anybody to think that they have to be glued to the screen. So even a fraction of your time is enough. This is actually something I'm doing off the side of my desk, okay, for individuals that want to learn how to sell premium. Now, the characteristics of selling Ultima Premium, the attributes of selling high probability Ultima Premium are undeniable. You never have to buy or sell the stock. I want to make that clear. So you never have to buy or sell the stock. Okay. Risk is precisely to your comfort level, like tailor your risk. Another thing, and I haven't even hit this that much, you're never going to use a stop order here. I don't even want to hear the word. The stop order would be a very naughty thing in this particular context. We're going to use hedges. Okay. If the world comes apart at the seams, it's all right. You have the VIX trade on there. Okay. Save me, VIX, and it will. So, save me, Gamma Iron Condor, and it will. It's not going to reduce all the risk, but you have to understand what this business is about. Make a little bit, make a little bit, make a little bit, make a little bit. And what most people have done is taken huge losses. You're not going to take a huge loss. We're going to mitigate that risk. When the losses come, yeah, you know what? Okay. Take what the defense gives you. You're actually going to get out of the trade and you're going to get out of it quite happily. Okay. You can vary time frames and minimize risks. Probability of profit, most of the time with selling premium, you do a whole lot of nothing. It's a perfect strategy also. If you have a stock portfolio on right now, I don't care that we're at all-time highs. I just don't, okay? If you're at all-time highs, I can make this statement without unequivocation. This is the most risk anybody's ever taken in the history of the stock market. Think about that. It's true. It's the highest the market's ever been. It's the most risk anybody's ever taken in the history of the market because the market's never been above 4,000 before. This is a great way to enhance your portfolio. And an enhancement will reduce risk over time. It's an excellent tool also for those seeking to actually build account, incremental returns. Last but not least on this, new products, okay, allow for the sale of options nearly any account size. So, we constantly get the thing, I only have $3,000 in my account. It's okay. It's okay. In fact, we even have a small portfolio that we build specifically for people that have $3,000, $5,000 accounts. Listen, building a portfolio of options, do not let options intimidate you. And you'll hear me say that again and again. Selling premium can be done for minimal credits and minimal risk, but the sale of premium, okay, it's the same thing as like a big power saw. And I think the way to explain this is, and I use this analogy constantly, if you wanted to go out there and you wanted to build a house, you're going to have to use a power saw. But if you don't know how to use a power saw correctly to build a house, to cut through 2x4s, you will lop off a couple of fingers. Options, I'm telling you, options are the exact same thing. Options are the quickest, the fastest, the safest, the easiest way to get where you want to go in this business. But if you don't know how to use them correctly, you're going to lop off a couple of fingers. And that's the horror story you always hear about this. Listen, you can sell Ultima Premium and you can minimize risk. If you have limited options experience, just no fear. Don't let that options portion of it intimidate you because you're going to need these strategies for the foreseeable future. And we can show you how and when, okay, to sell premium in a matter of few hours. It does take a little bit of time because what we do here, right, is TheoTrade creates detailed recipes for every strategy, including, okay, selling premium, specifically Ultima premium. You know, you wouldn't bake a cake without a recipe, and yet people trade without one. And I mean that in not in a facetious way. They literally, people get into trades and like, why'd you do the trade? And they're like, I don't know, I thought it was going up. Okay, listen, that's not a recipe. Listen, this is what you need to know to successfully sell Ultima premium for a living. First of all, okay, what underlying stocks, indices, like index products. So you saw the spiders and you saw the QQQ and you saw the IWM and then you saw a little bit of the bonds over there. But what make the best premium selling candidates? Okay, can this be done in something like Tesla? By the way, Tesla used to be a good candidate. It's fallen out of favor. Can't use it anymore. Why can't you use Tesla anymore? Because that has everything to do with volatility. You got to seek out the right volatility. It's got to be there. Okay, margin constraints, volatility, like that matters, people. The volatility for these trades has to be very, very unique situation. What options expiration do I select? Should I do 101 days? What if there is no 101 days? Can I do 85 days? Maybe I should do 58 dadays. What do I do? Okay, you know what? Wait, go back to that for a second. Expirations. Let me just talk about expirations for just 1 second in here. Okay, because you look at something like the SPX. By the way, I call the SPX, it's the mother of all option products. In the SPX, look at this. There's 1 day, 3 days, 6 days, 8 days, 9 days, 10 days, 13 days, set, hike. Look how many expiration cycles are in this thing. It's insane. And eventually you could even work your way into the SPX, the mother of all products. They also call the SPX the Widowmaker. Yeah, that's one you don't hear too often. Think about all the expirations. You got to be dead on. You got to know what expiration to select. You got to know the delta of the option you should sell. Oh yeah, this is not just based on probability. We actually fine tune this via delta. Okay, what options do I buy against my position? Meaning like, hey, you went out and just sold an option. Now what are you going to buy against it? You got to get the hedge down. How do I build the position? And I'm not talking about how do I go out and sell an option. Forget about how to sell an option. That's easy. You go out there, you sell yourself into a 90% probability. Now what do? You're dead. Okay, you're dead if you don't actually know how to build a position. You know how to go out there and buy a VIX volatility spread to mitigate the risk of the downside. How to use a gamma iron just in case the marketplace explodes to the upside. Do I need a large amount of capital in my account to do this? Absolutely not. You don't need a large amount, and you can do this in an IRA. What's the right amount of risk? We can actually help you tailor the right amount of risk for you. When I say the right amount of risk, like literally dollar for dollar, okay, what risk do you want in there? What are the percentage returns supposed to be? By the way, you guys, if you watch this and you saw all the trades I went through the quarterly portfolio. By the way, that's not every single trade that I did. I do a lot more trades. Okay, but that was the Theo Theta portfolio. What you saw was Ultima trades, okay, and that's it. What was the consistent return in that portfolio? Okay, what was the consistent return in there? Because there's a consistent return. And we just hit it again and again and again and again. Okay, and you want to be kind of Johnny on the spot with being consistent in there. All right. How do I protect myself from market crashes when selling options? Sooner or later, we're going down, people. Come on, a year ago, everybody's like, I forgot about that already. Yeah, March of 2020, everybody asked, how would this perform? Phenomenal. March of 2020, when the marketplace crashed, we had risk twist spreads on. It's a grand slam home run. We ended up actually doing extraordinarily well and having some sold premium on there. Listen, let me show you what we do here specifically at TheoTrade. TheoTrade creates recipes in trading. When I say recipes in trading, the idea behind a recipe, this is criteria, it's step by step. And the whole logic, and I think the best analogy for you is if you get into the cockpit of a 747, okay, no pilot hops into the cockpit, they're like, let's go, hit the throttle up and, pull back and we're ready to go. It doesn't work that way. They hop into the cockpit of the 747, okay? They literally have a very definitive checklist. Some of the guys still use the old school manuals that they walk through. A lot of them now actually have it on an iPad, okay? And they go through a checklist. I mean, you'll actually see once in a while a pilot that's in a 737, they'll walk outside the plane and be like pulling on the engines and so forth. You're like, that really breeds confidence. The pilot hung like a monkey off the engine. It didn't fall off. We're good to go. Anyway, the point of me bringing that up is it is a checklist. a very unique checklist for Ultima Premium that you will go through. You have to go finite step by step. Again, what products do you do this on? What should the liquidity be? What should the volatility be? What should the expiration be? What should the delta of the options I sell? Once you actually do put these positions on, how do you go about mitigating risk? How do you spread risk out? How much risk is right for you? How many contracts do I do? Okay, it just goes, what if, what if, what if, what if? Okay, but then that's just the beginning. Then you're actually in the trade. And once the plane is in the air, okay, that's when the real problems can hit. I got to tell you, this is the selling premium is just like flying the aircraft. What happens? 90% of the time, nothing happens. And that 10% of the time, okay, you get a few hours of sheer terrifying greatness. Okay. You ask any pilot, they'll say the exact same thing. They're like, most of the time I'm sitting there playing cards with the captain. I go, what happens the other 10% of the time? He goes, I'm usually freaking out. And I'm like, oh, that makes me feel so much better on the aircraft. But trading is all about answering the what ifs. What might be a good stock or ETF candidate for you to sell premium? What's the correct options expiration cycle? How much capital do I commit to generating premium? What's the right strike options to sell? What's the strike options to buy? How can I limit my risk? TheoTrade has the answers. Again, definitive criteria, checklists for each strategy. But then after we actually get you into the strategy, then we actually cover the unique variables that you're going to encounter. That's when, all of a sudden you hit some turbulence. The marketplace gets absolutely wild. Okay. TheoTrade is the answer to those questions. What's the probability for the trade? How many option contracts do you do for the account size? Okay. When do you close the premium sell? What if the stock market sells off big? Do you bail out of the trade? Do you barf the trade? What if we rally massively? Can you fix losing positions? It just comes down to the how, the when, the why, at what price. And I'm telling you right now, that's just the beginning of the variables that you're going to face while selling Ultima options for a living. Listen, you can go and Google right now a ton about selling premium. Okay. What you can't figure out though is what selling Ultima premium is. Okay. You might know even how to build a few trades. And I make this point because you can go out there and you can Google selling options premium. 10,000 pages are going to come up about selling options premium. Okay. And as I said, you might know how to build a few trades. But what you do not have is TheoTrade's recipe for success. This is just my experience, 20 plus years of a trading experience. And TheoTrade is not just me. It's not Donkaufman show. Okay. But we have 7 other full-time traders here executing positions, researching. Okay. It's a very quantitative group. I had access to client order flow for 15 years, but I'm going to tell you right now, I'm not the only one that works here at TheoTrade, okay, that worked for Thinkorswim and TD Ameritrade. We have several, okay, from the money management side of the business, from the brokerage side of the business, from the trading side of the business. Okay, have viewed and studied. I have viewed and studied million accounts. Again, I ran education for Thinkorswim. I built education division of Thinkorswim, and then ran education for TD Ameritrade for the preceding 5 years after we were acquired. Okay, we had the largest option order flow. I'm telling you, we know what works, and that's where a lot of the criteria comes from. And criteria is your recipe for success. The following strategy and the corresponding criteria requires the utmost attention to detail. We literally spent years fine-tuning these trade setups, okay? But in the last year, this is where the edge has really come out. This is where Ultima trades, okay? Skew has made all the difference. You got to follow the steps to build a trade. We have an entire course designed for this. It's the Ultima Income Generator course. Now, before I even go into detail about this, the course, okay, was just recorded very, very recently. It is a 5-hour archived course. It's $497. And again, I'll go into detail in a second, but I'm going to tell you right now, because immediately people are like, another class to take. That is not what TheoTrade is. And I'm going to stress that to you right now. TheoTrade is not just another class, okay? We're not about another class. This, okay, is a complete system from pretty much A to Z. If you've never traded an option, we help you get started. If you've traded before, phenomenal, okay? This is not just watch a class and then out the door you go, because we get that. And I'm going to come to that here momentarily. First, the Ultimate Income Generator course. This is part of the TheoTrade system, okay? I happen to be the instructor for this particular course. It is a 5-hour course. It's archived and it's available immediately for streaming. It's available 24/7. We also have download capability for iOS and for Android. So you could watch it on any mobile device. If you've got your mobile device, you can actually download this onto your mobile device, okay? And you can watch it even offline if that works for you. The class slide deck for Ultima Trades that includes the entry and exit criteria, it's available immediately for download. Okay, I'm gonna go through in a moment here, I'm gonna go through really some of the finite points, some of the curriculum for this course. But before I do that, I just want to explain one aspect. As I said here a moment ago, okay? Stay with me for a few minutes because a couple of aspects about this. Number one, okay, we don't sell a course for $500, okay? Because listen, when we put TheoTrade together, we looked around at the entire education, everything that's involved in stock market education. We've seen it all. And when I say I've seen it all, again, I ran education for TD Ameritrade, which is, running for a big brokerage firm is a little bit different, okay? Because you're handcuffed at a big brokerage firm. You can't say what you want to say because you have regulations. One of the reasons we started TheoTrade, because now it's Don and it's uncuffed. But we saw all of these courses, and what people do to you is they sell you a course for $500, right? And then before you know it, you have to pay another $500 for an indicator that goes with the course. Okay. And then you pretty much have to take another class for $500 to learn how to use the indicator that went with the initial course. But wait, there's more. Then you pay another $500 and go through another course because you had to learn something else. That's not what we do here at TheoTrade. And I'm just going to make this as clear as possible. Okay. If you're interested in learning, okay, more about the trading business, if you're interested in learning, okay, many genres of trade, what we do here at TheoTrade is provide everything to you, okay, at one cost. Everything, okay, below the cost of $500. And we're going to give you an excellent incentive today with a number of bonuses that come with this Ultima Income Generator course. Yeah, you're here today to learn Ultima Income Generator, but when I say we give you everything, okay, we'll even give you the access to the portfolios. We will text you trades out. Everybody wants trades texted. Yeah, we'll do that. We even do push notification if you're out of the country. We have our own mobile device, okay? We have over 6,000 people right now on TheoTrade. Okay, we don't do memberships. Everybody who's asked about them, we don't do memberships. That's not what we do here. Okay, we just charge you one really low fee. Okay, and you get to stay here as long as you want for the one really low fee. We give you everything that we've ever done here at TheoTrade. But today, this is about the Ultimate Income Generator course. Let me actually go through the curriculum, and then I'll explain a few things to you. Okay, here's actually the course curriculum. So you're going to learn how to sell premium, more appropriately, how to sell Ultima premium. You're going to learn how to build a portfolio of high probability trades, okay? And in doing so, to create consistency, monthly returns, regardless of your starting capital, all right? Detailed entry and exit criteria. A big portion, people, of this course, entry and exit criteria. People come here for the criteria. Anybody can learn to sell premium. Hey, you can sell premium, you can sell premium. You got to learn the criteria. You're going to learn a little bit about the option Greek so you actually know what your overall risk is, okay? You're going to learn to use a risk array. Portion of the course actually, okay, there's broken into about 7 different sections, but the portion of the course is covering risk arrays and how to actually visualize profits and risk before the markets ever move. So you're actually going to learn in this course, okay, before markets move, how much I can make and how much I can lose no matter what happens in the marketplace. It's critical to us. How to properly allocate in a way that reduces risk to minimize, okay, your portfolio risk. Very, very hands-off. Discover risk mitigation techniques designed to hedge some of the most extreme market environments. You're never going to get caught off guard about what happens next in the marketplace. You're also going to learn how to sell premium and small accounts, a retirement account within innovative new trading vehicles. Everybody always worries about margin. You're not going to have to worry about that. Okay, that's actually the course curriculum. And again, it is 5 hours. And I tell you that right up front, it's 5 hours. In addition to it, if you've never traded an option before, okay, if you've never traded an option before, you should probably start, okay, in a whole area that we have. It's called Start Here, Options 101, Options 201. I'll cover that here in just a moment, okay? Now, before I get there, TheoTrade is a completely riskless trade, okay? There's a 90-day money-back guarantee. We've never done it this way before, but the way this works now, it's money back guarantee. If you're not satisfied with anything we do in the next 90 days, just email us. You don't have to call us. You don't have to do a little dance, make a little love, get down tonight. Just email us at support@theotrade.com and we just give you your money back. It's just a full refund, okay? The money back guarantee stipulations, there are none. You know, we've done some like things where you're like, trade with us for the next 90 days. You don't even have to do that anymore. Okay. You don't have to trade with us. Listen, check out what we do. Okay. You're not going to be disappointed. No excuses, no questions. You don't have to tell us why you want your money back. Email us anytime in the next 90 days. If you're not satisfied, we give you the money back. Just go to theotrade.com/skew. It's S as in Sam, K as in kick, E as in echo, W. So it's theotrade.com/skew, and you can enroll for it now. Okay, now I'm going to get into the bonuses, right? And I'm going to get into what this is actually going to price out to. So everybody is like, what is TheoTrade? Well, listen, TheoTrade, as I said, is kind of all encompassing. I think the best way to explain it is to show you. We go beyond one class or one indicator. Like we actually get, when we were building TheoTrade, we're like, let's just build something where we don't have to keep selling classes. We hate that idea. Sell a class, sell another class, sell another class. It just pisses everybody off. And it doesn't support anybody. It's not helping you. It's only helping, the guys that are actually running the firm. I can't stand that. Maybe charge you for some software, charge you for an indicator. Listen, we don't do that here. We do everything. And we're going to give you everything to trade, to invest. We're going to do it one place and one price. Okay. Listen, you can't even call your brokerage firm anymore. I'll make a quick point over here. By the way, I'm going to make it cooler in here too. You can't even call your brokerage firm anymore for support. You can email us. We'll actually talk about trades in email. You can email us at any time. Listen, here's the first bonus. Here's the quick start guides, all right, to trading. If you've never put on a trade before, okay, I'm going to give you my own training, all right, that'll take you from complete newbie to entering into your first trade. Again, it's a quick start guide, right? This is the very first bonus in here. And again, I just want to kind of detail this for a second. Options 101. So look, options 101, options, 201, options 301. I'm going to make a quick point, okay? There's a class here on order execution, part 1, 2, and 3. If you're the most experienced trader in here, you're going to get a lot out of this. I know that this is under the beginner's guide. This is under the start guide, but I'm telling you, okay, huge amount can be gained learning like options 301, volatility skew in you, okay, probability, expected move. There's so much in this archive. So the first bonus is a quick start guide. All right, some of you already know that. Number 2, we're going to give you access to over 100 trading classes, literally today, now, okay? You enroll for Ultima, and you get access to every class that we've done since we kicked off TheoTrade. TheoTrade launched in 2016. We have over 6,000 people on the platform currently. When I say you get access to over 100 classes, I'm going to show you some of the classes, but here, they're available all immediately on demand. In addition to that, okay, we still do new classes about once a month, okay? Guide to small account growth with in-out spreads. That's probably the most prolific class that we've ever done. All right, more people have watched the in-out spreads class than probably any class that we've ever done. Not because it's been around the longest. I mean, listen, you get access to every class. Guide to surviving through extreme volatility, volatility back spreads, growing a small account with black book spreads, how to collect income being short, the next big short. This is the risk to a spread. The risk to a spread is your hedging class, okay? Iron condor, selling premium, minimize risk, day trading NASDAQ futures. You name a genre of trade, we have a class on it. Pairs trading, essential skills for consistency in trading, covered calls, income generation. Start adding this up. And again, I want to show you what the archive looks like, right? Let's go into it, right? This is options 101. I don't need no stinking options 101. Well, here's the class archive. This is what TheoTrade looks like. This is the site, okay? You want to look about options, option newbies, technical analysis, futures and bonds. If you want to trade futures and bonds, stock classes, day trading classes, trend trading classes, okay? Here's my baby. Me, I am the resident option geek. All of our instructors have very unique skill sets here. Me, I'm the option geek. So you get access to all of these. Weekly options advantage, beginner's guide to ratio butterflies, option Greeks, strategy week, duration iron condors, selling options for a living, okay? As I scroll down over here, Ultima income generator. That's the class that you're here for. And I said, I just recorded this a couple of weeks ago. We cleaned it up, packaged it, ready to roll. Gamma iron condors. I'm telling you guys, you're absolutely going to love what we do here. You get access to 100 classes, okay, from today. So you get this beginner's guide, you get access to 100 classes. Bonus number 3, all access TheoTrade VIP membership pass for free. What is it? It's 3 months unlimited access to TheoStream. What is TheoStream? It's chat room, okay? We have a chat room. What does it look like? Well, I think the best way to explain TheoStream is to actually see it. Okay? By the way, this is live right now. When I say it's live. This is actually right now. This is Tony Rago wrapping up the day. So he is live, and you'll actually hear him call out trades all throughout the course of the day. He's quiet right now, apparently.
This thing has no interest in doing anything.
As I'm actually saying it, he was going to say, this has no interest in doing anything. What you're actually seeing is Tony's screen. He's trading NASDAQ futures live, okay? And they're actually calling out trades in the chat room constantly in here. So the chat room on any given day can have a few thousand people in it. And you're actually seeing our screen stream live. You can even put this and branch it off to another screen. That is what TheoStream happens to be. Now, in addition to broadcasting, we do broadcast 6.5 hours a day. We do real-time trade ideas. We actually do push notification. We text you out trades. We have 5 different trading portfolios. One of those trading portfolios I'm going to show you momentarily. We have daily coaching sessions, okay, with timely topics, and our instructors. And probably one of the things that I weigh heavily into here at TheoTrade, our instructors directly answer your questions via email. You can shoot us an email and you can ask us trade related questions. This is part of TheoTrade. Okay. So not only do we give you access to every class we've done, we give you access to the chat room. We give you access to our instructors via email, and our instructors answer emails. I answer emails. Here are the instructors. Jeff Bierman, analyst, trader, and former chief technician for TD Ameritrade. By the way, Jeff Bierman also is a professor of finance at DePaul. Okay, but for those of you, if you've ever been on the Thinkorswim platform, Jeff actually built over half the studies on the Thinkorswim platform. He's actually one of the first people we grabbed here at TheoTrade. So Jeff worked in my group at both Thinkorswim and TD Ameritrade for 7 years. We actually worked together before we actually brought him on here at TheoTrade. Next in the docket here, Matt Williamson. Matt Williamson, market neutral premium selling option strategist. Okay, Matt is kind of our resident options geek in terms of like spreadsheets. If you are a much more quantitative individual, and for those of you that like the engineering type, okay, we bring you Matt Williamson. Definitely differentiates from me because Matt actually can define edge inside of a spreadsheet. Next, we come to Corey Rosenblum. By the way, Corey Rosenblum also has the designation of CMT, as does Jeff Bierman, as does none other than Brandon Chapman. We have 3 CMTs on our crew. If you know anything about CMT, it's an incredibly difficult market designation to achieve. So Corey is our senior strategist. He's a swing trader. Okay, so Corey actually calls out our swing trades throughout the course of day to day. Next on the docket, we have Brandon Chapman, CMT, macroeconomics, technicals, and fundamentals. Now, Brandon also comes from both Thinkorswim and TD Ameritrade background. Brandon actually wrote the course manuals at TD Ameritrade and all their education. So literally 7 million people. That's the guy that's actually responsible for writing some of the educational content. In fact, all the educational content went through Brandon Chapman's crew. Next in the docket over here, probably our most experienced trader, Steve Slim Miller. It's a 43-year veteran stock options and futures trader. Slim has forgotten more about risk management than most of us will ever know. There's one really big aspect of Slim Miller, and I'll show you in a moment. He's actually our in-house psychologist here at TheoTrade. Very few education firms have an in-house psychologist. He's ours. Okay, Tony Rago, NASDAQ futures and intraday strategist. Last but definitely not least, Blake Young, market profile. If you're familiar with market profile, futures, currency, and our commodity trader. Everybody has an extraordinarily unique genre of trade. This is actually us kind of meeting on Zoom a couple of weeks ago. It's a motley crew, but it's definitely a crew. But again, 8 full-time instructors here at TheoTrade. We also, in addition to that, give you access to 59 proprietary indicators and scans. The auto expected move. I'm going to give you the auto expected move here momentarily. S&P 500 gravity points. We give you a TheoTrade RSI Laguerre. By the way, when I'm talking about this, give you access to like literally every study that we do. This is a big one you're actually looking at right here. In fact, here, want to see it? Okay, that is the expected move in the SPX. That line was actually drawn, okay, last Thursday. So last Thursday, if you watch the evening videos, last Thursday, I drew this line, and guess what? We're literally on it, and we should be on it. It's the upper edge of the expected move. It's no surprise whatsoever. Next generation squeeze indicator, complex position tracker. These are some of the proprietary studies and scans. And again, this stuff, it's a little overwhelming. You're like, oh my gosh, man. So We give you access to all the courses we've done. We give you access to the chat room. We give you access to all the proprietary indicators and scans. Now let's get to the TheoTheta Live portfolio, okay? So I am actually the trade instructor, but I'm also the portfolio trader for TheoTheta. Okay, what is TheoTheta? It's what I've been actually showing you the results to this entire trading session. Okay, so TheoTheta portfolio. If I start opening it up, okay, a couple of trades that are in here. Basically, what I'm actually referencing in this particular case, this portfolio, it's run by me and me alone. It is a no holds like trading approach. Like nothing is held back. You get to see everything that I do. All right. Full disclosure on all trades, opening and closing in all hedging positions. Watch me discuss positions like never before. We even do weekly video updates on this because again, you're like, I can't tune in all day, every day. Like, man, 6 hours a day is going to blow my mind. You don't have to tune in for 6 hours. TheoTheta, it's a portfolio. I'm actually going to show you. We also, in addition to the main TheoTheta portfolio, we have a TheoTheta small portfolio. That's people that might have a $5,000 account, even a $2,000 account. It's fine. Like, again, this is a lot to like consume. We do all of this. Okay. This is what the TheoTheta portfolio looks like. Again, these are just, by the way, I'm showing you here closing trades. I bought it back, I bought it back, I bought it back, bought it back. Okay, these are all the closing trades that I've done just recently. All right, the entire portfolio though is there. And we just set up the most simplistic spreadsheet. You know, you don't have to like freak out. Don't freak out on me now. And if you miss something that we do, we update you on the TheoTheta video. We do this video and we do this once a week at the end of a week on a Friday. We actually update you and say, this is all the moves that I made. Nothing is like, you got to do it right now. You got to get out. You got to get in. Okay. These are really hands off, very, very hands off trades. Bonus number 5. We okay so far? So we give you a portfolio. We give you all the classes. We give you all the education. We give you the ability to email us. We have a technical analysis toolkit. This is kind of Jeff Bierman's baby. Now, Jeff Bierman, again, he's our in-house market technician, and he's also a professor of finance at DePaul. Technical Analysis 101, 201, MACD indicator systems, time-based. Just because I am not into charts doesn't mean that we are not into charts. We have several market technicians. Oops. Bonus number 6, day trading treasure chest. So intraday trading, NASDAQ futures, that's Tony Rago. Trading, okay, the S&P futures blueprint, consistent intraday strategies and setups. Listen, as I said a moment ago, okay, as I said a moment ago, you name a genre of trade, and I just want to show you, like the day trading classes in here, here you go, okay, some of the day trading classes that we offer. What products to watch and why? Day trading NASDAQ futures, okay, there he is. That's actually Tony Rago, all right, high probability intraday trading system, all right, and there's 11 additional day trading classes in here. Bonus number 7. This one is critical. You know, the cost of TheoTrade is packed right into here. 5 essential building blocks to successful trading, and it's with Slim Miller. Okay, this class, I'm telling you, if you just watched one class here, you're going to absolutely be blown away. Okay, that one class we could charge easily $2,000 for, and people would line up for it. It's just packed in. It's part of our archive. Okay, we make this a big deal because mindset and approach to this business, okay, is essential. Steve Miller, again, was actually a market maker turned behind screen trader, and he was one of the first to ever do it. He actually went behind a screen and started trading in the early 1990s. But he used to have P&L every single day as an individual market maker of over $1 million. Okay, you guys are going to love, absolutely love his mindset class. Okay, bonus number 8. A quick start guide to Ultima trades. So not only do we give you the 5-hour course, we have a quick start guide. It's a PDF file that you can go through. It's like a Cliff Note version of, okay, Ultima trades. Listen, what our members are saying. This comes from Jeremiah. It's more recent. My first 4 trades following exactly the details in your Ultima class just closed out using GTC orders. That's good till canceled orders, so you don't have to monitor the positions. Okay, set right after getting into the trade. This paid for your class in less than a week. I'm very thankful I subscribe to your services. Keep up the good work. Thanks, Jeremiah. Okay, we include everything you're going to need. Classes, coaching, email access to the instructors, okay, live trading room, live trades, indicators and scans, mobile access. It's everything. And if there's something that's missing here, please, by all means, let us know, because what we feel that we've built is TheoTrade has literally built the Netflix for traders. It's $297 for 3 months. That's it. And I want to be really clear about something, and I'll go through this, okay? And you guys, listen, for those of you If you want to enroll right this second, and I'll take you through this as well, it's theotrade.com/SKEW, S is in Sam, K is in Kick, E is in Echo, W, theotrade.com/SKEW. The one aspect that I want you guys to understand, it's $297 for 3 months. This is not a membership, okay? We don't bill you again. We're not going to bill you again, and it's not an introductory price. After 3 months, what happens? If you want to do it again, we'll ask you. It's $297. You go, what happens after that 3 months? It's $297. We ask you there every single time. We don't like gym memberships. We think you don't probably like gym memberships. We don't like the whole idea of monthly memberships. The reason I pick on gym memberships is I've had one where you literally could not get out, and it was during COVID, and you could not get out of the gym membership without physically going to the gym, except I moved to the island. I moved from Scottsdale, Arizona, and I moved to the island of St. Croix. Why? Because it's really nice down here. I moved to an island and they're like, nah, you have to come to the gym to get out of the gym membership. And I'm like, well, I can't. I'm no longer in the country. And they didn't like that. Okay. We don't do memberships like that. It's just $297 for 3 months. Okay. Go to theotrade.com/SKEW and roll for it. Listen, it includes the Ultimate Income Generator course, right? It's available immediately. It's 5 hours, all the criteria. We give you access to over 100 different trading classes. Okay. There's new monthly classes. There's a live trading chat room. We broadcast 6 hours a day, real-time trade ideas. When I say real-time trade ideas. Market indicators. There's 59 proprietary indicators and scans. There's text and push notification on trade ideas for 5 separate portfolios. Daily coaching sessions. We say coaching sessions. This is continued education. That's predominantly Professor Jeff Bierman. Okay. Then we come in and directly answer your trading questions via email. I'll tell you what, okay, for $300, just answering your emails is enough. Because again, you have nobody else to turn to. You ask a question in the brokerage world, what are you going to do? You're going to call up Charles Schwab? Hey, Chuck, you won't even get through. I'm serious. If you even try to call TD Ameritrade right now, nobody will pick up the phone for an hour and a half. Try it. Nobody will pick up the phone. Nobody picks up the phone anymore at all. We answer emails. We answer emails, and we do that, okay, in a timely fashion to answer your trade-related questions. And I'm going to tell you right now, we will answer your trade-related questions in there. By the way, I want to reiterate something. TheoTrade is a completely riskless trade. It's a 90-day money-back guarantee. And I'm bringing this back up because if any point in the next 90 days, if you're not happy in any way, shape, or form, just email us. There's no song and dance. There are no stipulations. Email support@theotrade.com. Get your money back. No excuses, no questions. I'm going to tell you right now, we have over 6,000 people here. If you want to be here, phenomenal. Okay. We want everybody here happy with us. Okay. We want a great reputation in the trading world. We have relationships with all the major brokerage firms out there. We want those to be good relationships. Listen, no excuses, no questions, no commentary. If you need to cancel, you need to cancel. We get it. Just email us, ask for your money back. One kicker on there, if you receive a refund, you get to keep the intro to options. We'll give you the 101, 201. We'll give you the entire intro to options in there. By the way, get into TheoTrade now. We're going to work with you directly. There are 50 spots today and only 50 spots on the TheoTrade riskless deal. The reason we do this, we have 6,000 members. We answer emails directly. Okay. We literally will interact with you as much as it takes. I mean, I probably spend legitimately 4 or 5 hours of my day every day on my iPad. I like to answer emails predominantly on my iPad. We spend 4 or 5 hours a day, though, answering client emails. We've now limited to 50 spots. Why? To incentivize people, and people that want to sign up for the riskless trade deal, do it. It's a matter of size. We trade live, but it's the email mentoring that is probably the biggest restraint on us. So we allow 50 spots in the TheoTrade riskless deal. What I mean by that, it's the first 50 people are into the 90-day money back guarantee. Okay. And by the way, I'll read off the names as you guys get into that, and I'm going to answer some questions here directly. But again, send us your trades. And the $297 riskless offer, it's never been available before with Ultimate Income Generator plus the Theta portfolio. And again, it's a no stipulations money back guarantee. So I did want to bring you over to the page really quick. If you actually jump onto this, and again, I'll make sure everybody sees this particular page. It's theotrade.com/SKEW. And I want to just cover 2 or 3 things, and then I'm going to start answering some of your questions. By the way, we have some general questions I'm going to answer, and then I'm going to answer some very direct questions that have actually come up in the chat room. So theotrade.com/SKEW. We are there to answer questions, not only in the chat room. If you have just general questions, go for it. okay? And we've got in there Brandon, Jeff, myself to answer a couple of questions. But as I actually bring this up, TheoTrade.com/skew, the Ultimate Income Generator course. The reason I'm bringing this on here, okay, a few aspects. Number one, if you ever need to get a hold of us, support at TheoTrade.com. As you're enrolling for this, click Add to Cart, okay? And the reason I'm showing you this, well, I'm going to detail that in just a moment, okay? It's literally 100% risk-free. The other aspect I wanted to detail in here, okay? We do ask for a phone number. Okay? It's not to be able to call you. It's for the text messaging. If you put your phone number in here, it'll automatically enroll you for text messaging. If you are out of the United States in a place that you can't receive text messages, have no fear. We have a mobile application that has push notification built into it. So you can kind of do either or. But for those of you, if you're in the US and you want text, put your information in there. The other aspect I bring up here, okay, we do not renew you automatically. It's a single payment of $297. By the way, you can also break this into multiple payments if you so choose. That's up to you. We just offer that. Again, it's completely money back, risk-free if you're one of the first 50 people in here. But I just wanted to take you guys through that, make sure everybody understood that. Again, it's TheoTrade.com/skew, and I'll pop that in here, okay? What our members are saying, this comes from John, and this is actually March 30th. My closed year-to-date profit from Ultima Trades has paid for a yearly TheoTrade subscription. And yearly is basically $1,200. That comes, thank you, from John. By the way, this is everything for $297. Ultimate Income course, quick start, right, guide, 100+ trading classes, access to the chat room, push notifications, all the different trade ideas, the Theta Live portfolio, okay? Then, of course, we have the technical analysis toolkit, the day trading treasure chest, the mindset mastery, and the quick start guide to Ultimate Trades. Okay, go to TheoTrade.com/skew. By the way, follow to that link for the auto expected move indicator. For those of you kind of waiting for the auto expected move indicator, I will actually show you where that's found right now. Come to TheoTrade.com/skew. Okay, it's right down here on the bottom of the page. Speaking of which, those of you, if you're enrolling right now, do not worry about downloading the indicator. We give you all the indicators on the site. They're all basically in the site. So again, it's TheoTrade.com/skew. I will read off the names of those of you that are enrolling because everybody gets a little anxious. It's 50 spots and there's 800 people plus that have been on this thing. So they'll fill up pretty quickly in here. And I'll read off the names of the individuals that are actually enrolled as we go. And I'm going to answer some direct questions here momentarily. By the way, what our members are saying, this comes from Jeff and November 10th. And I wanted to pull this one up because I like it. Wanted to drop a quick email. I think the class is wonderful. Okay. I've been stretched each session, but not beyond my capability. After each session, I watch the recording and do the homework. I feel that each week my knowledge in options trading is growing steadily and rapidly. I can obviously speak for my classmates, but it's going very well for me. Thanks for the great instruction, Jeff. And this is just going through sequentially and learning a little bit about options in here. This one actually comes from Todd Summerall. And the reason I'm throwing this particular email up here is to show you, you can email us direct trade related questions. That's why I'm putting this email up here to show you this. When I say direct trade related questions, people, okay, most of the crew here at TheoTrade have been broker dealers. I'll just tell you a little bit about myself and Jeff Bierman and a couple of the other guys here. So I was a Series 3, which is actually registered with futures, okay? So I had a Series 3, which basically gives you the right to talk about futures. I've had a Series 4, which is an option principal. I've had my Series 7, which is just a regular, broker dealer. I've had my Series 24, which is a principal broker dealer. I've had my Series 66, which is a 65 and 63 combined, because I did manage over $300 million when I first started my career. The reason I bring that up is for the express reason is you don't have to send us an email and go, I supposedly placed this position. What would I do if, or like people literally still email us and it kills me because they're like, hey man, I have this this friend that owns a lot of Apple. And like, seriously, just email me. And I'll show you that in this email. Don't know if you remember, but I emailed you a few weeks ago and told you my delta was positive a couple thou or more. Basically, this guy is massively long stock. By the way, this says Friday. This email actually comes from over a year ago. This email came in in early March, right in the onset of COVID. Okay. And it says, you told me to smash it or I was going to be in trouble. I smashed it. You saved my account. I just want to thank you. For your information, before Theo, I had no clue about Portfolio Delta. Big hearty thanks to you and all of your team. My finances would have been a goner without your advice. Okay. I don't mind throwing that in there. By the way, it says you can use this if you want. Well, thank you, Todd, because I did. And the reason I throw that in there is to show you, like, I don't listen. I would rather you be decisive. Okay. You cannot have indecision in this business. You just execute, execute, execute. I will give you every variable to be able to get in and out of positions, but you email us. Okay. That's a big portion of what we do here at TheoTrade. One of the reasons we have 6,000 clients here, over 6,000 clients, is for the express reason of there's nowhere else to turn. Like, you don't have anybody to bounce ideas off of. I do. Okay. I got 7 other guys that I talk to on a day-to-day basis. Now I'm going to answer a couple of generalized questions. By the way, I'm going to read off a few of the names that have initially popped in here. This is for the riskless trade deal. JR from Nebraska, Sandra H from Maryland, Gerald G from Florida, Wayne W from Vermont, Michael J from Minnesota, Patrick V from Virginia, Christina W from Delaware, Bud P from Arizona, Joseph E from Illinois, Kevin S from North Carolina. Okay, well, I want to go to North Carolina. I want to spend some time. I have friends in Asheville now. Lyle H from Canada, David A from Minnesota, Michael R from North Carolina. Again, I like North Carolina. It's a thing now. John D from Pennsylvania, Jeremy H from Oregon, Robert W from California, Mark F from New Mexico, David B from Georgia, Thomas M from Florida, Lowell H from Texas. All right, that's just the first batch. By the way, it takes me about 7 minutes before I actually see your name populate in here. Let me get some of the general questions out of the way. We're going to get into the very specific questions. So general questions. Number 1, you need a laptop. People always ask, what do you need to get started here? You need a laptop? We have everything you need to get started from novice to extreme traders. Like, seriously, you don't even need a laptop anymore. I think you can actually argue that you can do almost everything off of a mobile device. And I don't mind saying I do. I actually trade a huge amount off of mobile devices. And I'll tell you another thing about that with the mobile devices. Okay. It doesn't matter whether you're iPad or Android. We actually build for both, as do most of the brokerage firms we work with. By the way, this is not a membership. I like to reiterate that we will not auto renew or bill you again. And I'm so adamant about that because, again, I've just had bad experiences myself. We build this business here at TheoTrade based on a lot of our own experiences, not only in the finance world, not only in the educational world, but in the real world. Like, nobody likes memberships anymore. And yet most companies do, whatever. Okay. We'd rather do what's right and keep clients happy. So number 3 over here, we're now providing a TheoTheta weekly update. So we actually film a video on a Friday. And on that Friday, we just, hey, it's about a 13-minute video typically. And it just updates you everything we do on TheoTheta and TheoTheta Small throughout the course of the week. By the way, we archive everything. We understand that you can't watch live. Every detail of every second of every day is archived, and you can even go back and watch the archives at higher speeds. So if you just want to tune in to Blake Young because you're a Blake Young fan, or you just want to tune in to Tony Rago, or you just want to tune into me, I'm on every morning, typically first thing in the morning. Okay. Tomorrow I'm actually doing what we call happy hour. We do a happy hour session at 5 p.m. Pacific, 7 p.m. Central, and I'll be on for an hour tomorrow night. It's kind of cool. Okay, we're going to provide you access to TheoTrade Mobile. You can download archives and view at your leisure. So you have access to the mobile applications. And again, you can download. You don't just have to stream stuff on your mobile device. You can download it when you're home on your Wi-Fi, walk out of the house, turn off the mobile, turn off any signal. You can still watch it, or watch it on an iPad. Add your cell phone number, and you'll actually get the text messages, or you can download, obviously, for push notifications, TheoTrade Mobile. Again, it's theotrade.com/skew. You can also email us anytime, receive a response within 24 hours. Just one little caveat here. I throw out a caveat, okay? Please, if it's a Friday afternoon, there's 10 minutes to go to the cash close. The bell is about to go off. You can see it. Don't email me with 5 minutes to go to the bell on a Friday afternoon and go, what do I do? Give us a little bit of time. We will respond faster than 24 hours, but I just put that in there because people literally will wait till Friday afternoon. You got to understand something. We trade, man. We trade here. Okay. Listen, we trade. And when we trade, yeah, Friday afternoon with a couple minutes to go to the bell, if the marketplace is moving big, you could probably expect my head buried in the screen, not necessarily in emails. So please, by all means, we trade, but give us a little bit of time before before you expect a response. And on the weekends, we typically answer emails on the weekends as well. Like nobody stops on a Saturday or Sunday, even over Easter weekend. Okay, after I was all ate and was fat and happy on Sunday, I answered some emails. What else are you going to do? I couldn't move after that. Number 9 over here, you're going to gain access to everything we've done in the previous 5 years: classes, coaching, trading sessions. If there's a trading topic, you can search it. We actually built a search engine into the site for it. Variations of all the trades can be done inside of an IRA account with as little as $2,000 within the account. I want to make just a little deviation there. A margin account, you can have $2,000, you can do anything. The IRA, technically, you're supposed to have $5,000 in the IRA, and you can do anything you want. Okay, when you can even sell options naked in an IRA. That doesn't mean you have to sell options naked in an IRA, but if you have $5,000 in there, you can do anything you want, and never worry about day trading margin restrictions, because we talk about that in the Ultima class. We at TheoTrade can also help you get approved for options at several major broker dealers. Also, there are 50 riskless spots available. So take action, enroll for TheoTrade now. It looks like we're going to have all 50 spots filled. Now I'm going to get into some specific trade related questions. I'm just going to pop this site back up here for a second. I'm going to answer, when I say I'm going to answer your specific questions, any of the questions that were not answered in the chat room, I'm actually going to go through and answer those. I'm also going to read off a bunch more names here momentarily, but let's make sure that I actually get all of your questions answered here. Again, it's theotrade.com/skew. Okay. I like this. Somebody said, I get overwhelmed with way too many trading products. So be able to do Ultima with just 1 or 2 products. Absolutely. Okay. You can absolutely trade 1 or 2 products. In fact, if you have a small account, we will not be trading more than about 3 products ever in the small accounts. So you're not going to have to be overwhelmed with products. I will say this. Okay. There are 2 different portfolios. There's the Theo Theta, which I call the big boy portfolio. And then there's the small Theo Theta, which is for smaller accounts. And you have to differentiate, because I'm going to tell you right now, you don't trade $250,000 like you trade $3,000. It has to be done differently. So we have 2 variations. The smaller variation, it won't have more than about 3 products in it. Okay. Yeah, but somebody said I have a small account. Am I going to be able to scale up to generate income? Absolutely. Now, I don't want there to be delusions of grandeur. Listen, what we do here at TheoTrade, we're traders. Okay. I don't want to have hype in here. I don't want people come in here and like, it's a 700% gain. It's this. There are trades that you can make some phenomenal gains on. What we're doing here, it's about steady generation of income. Okay. And that's really important to me, because there's just so much hype out there in the industry. Okay. Listen, I got to tell you, I'm 22 years in this trading business. This is actually my 23rd year. I started in 98. 23rd year. This year has been, okay, when I say this year, 2020 and 21 has been one of the most humbling experiences of my career, not because of profit and loss. We moved from Scottsdale, Arizona to St. Croix. I'm in the Virgin Islands right now, and people are like, oh, what a great place to trade. Okay, listen, moved down here because this is the hedge fund mecca, pretty much, of North America, if you want to call me in North America. In this particular neighborhood, right? Actually, in the room I'm in right now, one of the original market wizards lived in this particular house. He built the house. We just bought the house. He now lives 2 doors over. Okay, across the street, not going to use full names, gentleman Tom, he has $11 billion under management. Literally next door, okay, is the foremost market technician in the world. Guy across the street from me is the father of modern monetary theory, MMT. Like, this place is totally humbling. Okay, this is about a system for incremental returns. You have a small account, we will help you build that account, but we still want to be within like reason. Okay, you got to realize, in selling premium, it's about just that. It's about small, it's about incremental returns. And I hope you guys appreciate that because it's important to me. You know what? I like this. Somebody said I'm scared of losing money. Will Ultima help me get over this fear? Yeah, actually, not only will Ultima help you get over the fear, okay, you got to watch the Slim Miller course. And I put a lot of weight into some of the other instructors here at TheoTrade. Like I can speak for like my work, but I'm not the best guy to speak about my own work. Have other people do that. But Steve Miller's course, it's the psychology of it. It's about, gains and losses. I'm telling you, you need to watch that class. And if you need the link, even after enrolling, I'll send you the link personally to Steve Miller's class. And it's actually highlighted in there, but I want to make sure it's the 5 essential building blocks to successful trading. It'll change the way you view this marketplace entirely. Okay. Moving on over here. Okay. Oh, somebody said I have a $2 million account. First of all, $2 million account. If you have portfolio margin, okay, the more capital you have, you should actually think about diminished returns because the more capital you actually have, you want to mitigate risk much more tightly. But generally speaking, anybody that's north of like $1 million, okay, what do you shoot for? Okay, if you're making over like 30 or 40% in a year on a multi-million-dollar account, you're actually taking too much risk. I don't care what anybody says. Somebody, oh yeah, this person made 50%. Okay, listen, we're not talking about a $10,000 account, people. We're talking about 7 figures. Okay, and I've traded over $300 million before, and I'll tell you definitively what you can make and what you can't in there. By the way, if you have a full-time job, I wouldn't worry about it. You do want to play some of these trades during market hours, but most of it can actually be done off of mobile. But I mean, literally, you can glance at a position here, and in a moment, you're like, listen, I'm up 500 bucks. There's nothing to close today. Whatever, there's nothing going on. Done. Okay. I mean, that's how fast you can just glance at it, and you don't even have to have a screen. You can actually do it off your mobile device. So again, I'm going to read off more names here momentarily, answer a few more questions. So some more names popped in here. Gene C from Texas, Al C from Nevada, Roland P from Florida, David B from California, Robert W from Laos Peoples. Okay. Oh, Dominican Republic. You're close to me. So Ravir from Illinois, Douglas C from Canada. By the way, if you're Canadian, we have specific brokerage firms that we actually prefer. If you're out of Canada, well, feel free to email us about that. It looks like Kiri B from Austria, Clint G from Missouri, Randall C from California, Marhan S from Florida, Herman G from California, Rufat from Washington, Lynn B from Texas, Charles H from Texas, Hector T from Canada, Paul M from South Dakota, Randall T from Florida, Raj B from Texas, and Tim W from Massachusetts. Again, I have no idea how many people we have in here, but it looks like we're almost to the 50-person cap. We probably have 3 or 4 spots left. As I said, it takes me a few minutes before I actually see your name populate in here. Back to a handful more questions, okay? Oh yeah, somebody said, can you show me the hedge again? And what's the difference between Ultima Income Generator and Total Theo? So there's no difference. The Ultima Income is one faction. It's a class inside of TheoTrade. That's it. Okay. Total Theo is basically everything that we provide you here at TheoTrade. And in that wrapper is the Ultima. The other aspect is somebody said, can you show me the hedge again? So there's a couple of different hedges that we do here. The one that is working extraordinarily well right now is in the VIX. So we go out and we actually use this trade called a VIX vol spread. And the VIX vol spread, you can do it actually fairly far out in time. And what it does is it just clips risk. If the VIX, and I'll just give you an explanation, okay? If the VIX spiked up here to 40, this trade kicks into high gear. Now, if the VIX spikes to 40, that means the S&Ps are probably going where? Tanking. So the VIX is a cheap and yet effective way to mitigate exposure, that is to control or to hedge exposure in the S&Ps. So if you were to sell options way out here, let's say like a moment ago, we were showing you, I sold options literally here, okay, at the 320 level. If the market goes, boom, right down to 320 or below, the VIX is gonna go, straight up. The VIX goes straight up, it's gonna offset the loss. It'll cost me about $1 for the hedge, but that dollar can turn into 20, 25, or even $30, depending upon the type of hedge you actually construct. Okay. So, oh, I like this. Yeah, by the way, it says I've always had a hard time putting on the proper hedges at the right time. Yeah, no, you know what? So when you put the hedges on, you can just follow us. When you first start this out, follow us. Follow us into the hedges. We actually do that for you. Okay. So I have no problem whatsoever. We can actually put on those hedges for you. All right. We are, pretty much we've run over in time, but I also want a couple more names in here. Carl L. from Arkansas, Art L. from South Carolina, Steve A. from Georgia, Arthur M. from New Jersey. I do hope I answered everybody's questions. If I didn't, we'll stay here a few extra minutes and answer those. And if I didn't get to them at all, because again, there are so many people on today, you can shoot us an email. Okay. Enroll for TheoTrade now, just theotrade.com/skew. Never hesitate to shoot us an email. Tomorrow, again, I want to reiterate this because tomorrow is a little bit of an unusual day. Tomorrow morning, we're actually going to start the trading session with Tony Rago. He speaks like a different language. He's a NASDAQian. He trades NASDAQ futures. I will actually be on tomorrow evening. Again, tomorrow evening. So it's 5 p.m. Pacific, 8 p.m. Eastern time. I'm actually going to post the topic inside of the chat room. But you can actually even join us here. Corey Rosenblum is live right now. Again, Corey Rosenblum is live. After you enroll, hop into TheoTrade right now. Okay, when I say Corey Rosenblum is live, he's live right now. So you can actually watch Corey into the close. We call him the closer. He's Corey Rosenblum. It's a little bit of a slower trading session. Nevertheless, check out Corey into the close. And again, I want to thank everybody for tuning in. I'll pop this address up here. Thanks a lot, everybody. Have a wonderful afternoon. Bye-bye.